minutes from the close of trading here in the U.S., live from Bloomberg's world headquarters in New York, I'm Scarlet Fu.
And I'm Oliver Rennick. U.S. stocks swinging between gains and losses, while the dollar rallied to its highest level since March.
But the question is, what'd you miss? A proposal in the cigarette business. British American Tobacco has offered $47 billion for full control of Reynolds American. That deal would make the world's largest publicly traded tobacco company. We'll hear from a shareholder who has a big bet on the acquisition. Plus, why the world's major central banks need very cautious, coordinated messaging. Traders are missing a major technical level for yields. We'll show you where the pain could spread. And Donald Trump's jokes at a New York dinner strike a sour tone. Just 24 hours after engaging in their final debate, Clinton and Trump garner laughs, but also boos from the crowd.
And as we head towards the close, let's take a look at where markets are trading right now. A little bit better than we started off the day here, as the Dow is a little bit down, but only by about 5 basis points. The S&P broke into positive, then went back down. Now it's kind of fluctuating around unchanged. And finally, the Nasdaq doing a little bit well, up about 0.25%. Of course, we start off pretty weakly, but now we're doing a little better. Let's get some more with Abigail Doolittle. Abigail?
Well, yes, we do have the Nasdaq trading slightly higher as it closes out the week, and even better for the weekly performance, up more than 0.5% on the week for the Nasdaq's first up week in 3 weeks. And the strength this week, Oliver, is largely about technology and some of those mega caps. One of those names, Netflix, up 25% on the week. And this is actually a consumer discretionary stock, not a technology stock, but on pace for its best week since April of 2015, after Netflix essentially ended a string of messy and disappointing quarters by beating third-quarter estimates right across the board. The subscriber beats were especially impressive, especially on the international front. They beat estimates by 60%. So this is somewhat of a vindication, Oliver, for this company, considering that the stock until Wednesday had basically been down all year on those messy quarters. And we go into the Bloomberg and we take a look at BTV 3330. This is the FANG trade on the year, the big internet trade on the year. And we see Facebook remains the winner, but until just this week, again, it appeared that Netflix could possibly be decoupling from this whole trade. But now in this monster quarter performance and the weekly performance, we have Netflix right back on track on the FANG trade. Another big winner on the week, Oliver, Microsoft shares are up more than 4% on the week, on pace for the best week since July of this year, after the company put up a very nice fiscal first quarter, beating earnings and revenue estimates. And behind the strength was the cloud, the company's cloud business, plus better than expected results in the PC business. Now, interesting here, the company actually offered second quarter or December quarter sales guidance that was below street estimates, with the stock hitting a new record high today. Investors seem to be looking past that, but sales could be pretty important for this company beyond what you would imagine is typical. We go into the Bloomberg and we take a look at another chart. This is BTV 4472. This is a 10-year chart of Microsoft and Aqua and revenue in orange, and we see that there's a pretty strong correlation, but we also see a divergence that started right around the beginning of this year. Now, some of this reflects that Microsoft's revenue has actually been declining for the last 2 years on a year-over-year basis, but for fiscal year 2017, Microsoft's current fiscal year, investors are looking for 10% growth. So the stock seems to be trading up ahead of that event. So it'll be very important, Oliver, for this stock to continue this great performance, that the revenue growth does, in fact, come through in the continuing and the quarters ahead, Oliver.
All right, great stuff on this Friday. Thank you. That's Abigail Doolittle at the Nasdaq.
What'd you miss? British American Tobacco announcing plans today to buy the stake in Reynolds American that it doesn't already own for $47 billion. The takeover would create the world's biggest listed tobacco company, with brands including Newport and Lucky Strike, at a time when the number of players is shrinking. Is BAT's proposal attractive enough, or will it go up in smoke? Let's get some insight now from David Winters. He is the CEO of Wintergreen Advisors, whose top holdings include Reynolds American and British American Tobacco. So, David, this is a deal that's been talked about. It makes sense. It's been around. It's happening now. Why now? Why would this deal come together now?
I think there's a number of reasons, Scarlet. I mean, first of all, you've had the British pound come down. Reynolds has moved sideways this year. And so it makes so much sense to put the family together to make the whole thing worth more.
So a lot of times when we have these deals happen, these big deals, you have both parties talking about synergies. It's that great buzzword that always pops up. And they talked about that. They mentioned some of the sort of cost-saving measures. But for you, the value add is not so much in that. It's elsewhere in terms of the value proposition. What is it? Explain why.
Well, Oliver, there certainly will be synergies. They don't have to have two headquarters and things like that. But you put the company together and you have a stronger global presence. It's now a complete company that can operate almost everywhere in the world and just grow these brands. So it's a story about becoming an even better company.
It's a bigger company. It becomes more powerful as well. Does that mean that it has more pricing power across the different markets in which it operates?
Well, pricing power is what really makes tobacco attractive, is because they can raise prices over time and customers will continue to pay. I think that pricing power is something that has to be gently used over time.
What about dividend power?
Look, one of the things, again, about BAT and Reynolds has been they not only have grown the asset value, but they've also grown the dividends, and so you win both ways.
How does this sort of position the market then? When you look at these big tobacco companies, they're almost becoming, in terms of the number of them, there's fewer and fewer. They're still big, and the more deals there are, the bigger they're going to get. But does this sort of force the hand of some of their competitors?
Well, it certainly, Oliver, encourages people, once the dance starts, more people have a tendency of teaming up. There's always that possibility that Philip Morris International and Altria will also get back together. There was a demerger years ago. And Altria is, I think, one of our largest positions as well. So,
which one of those two makes more sense?
We like Altria. It's one of these things where, you win anyway. You got a nice dividend, Scarlet. The asset value grows. They've got a beer element. So we think these are very attractive companies for shareholders.
In terms of scale, that's what the companies get by teaming up. The thing that caught my interest is that both British American Tobacco and Reynolds American already share a lot. They work with each other in terms of technology. So when they get that scale, what kind of cost savings can we realistically expect from a combined force?
Well, there was a $400 million number that was in the release. Usually they're conservative with those numbers. And I would think over time there will not only be cost synergies, but there will also be marketing and other synergies as, the smokeless segment grows. So these are very smart people who over time have been hugely shareholder oriented, and I think that there's a lot of money still to be made.
When you look at what happened with the shares today, I don't want to read too much into it because it's just a day, but there was a big difference between how investors reacted in both parts of in both companies. British American Tobacco was down about 3%. Reynolds, on the other hand, surged. Are markets misinterpreting this? Because it sounds like you think it's going to be very positive for both parties here. Is this sort of just a natural blip that happens on the acquisition side, or is there something to be read into that?
I think, Oliver, it's a natural blip. BAT, there's concern that they're going to have to bump and how much they're going to bump. They'll probably, because again, there's an independent board that's very good. They're going to negotiate hard with BAT, we would presume. But we think ultimately, this will be a win-win situation. And even if the stocks come in a little bit, we're long-term very enthusiastic.
You mentioned that one of the reasons why this deal might be happening now is because the pound has fallen so much, and British American Tobacco will be using the pound to buy Reynolds American, which is a U.S. dollar-based company. If the pound continues sinking further, some people have estimates of perhaps even parity for cable. What would that do in terms of the timeline for this kind of deal? Would it disrupt that? I mean, would it push them to move faster, or is there a real risk that it could be dragged on for a while?
Scarlett, I think this is going to happen in a logical manner. And I think that what it really does is BAT has benefited from the pound going down because they earn all their money in foreign currencies. And now with the dollar being a bigger component of BAT, it'll make BAT even more of a strong dividend payer and earnings growth player.
All right, David Winter, CEO of Wintergreen Advisors, clearly in favor of this British American Tobacco and Reynolds American deal.
Coming up, we'll hear from Mohamed El-Arian, Bloomberg View columnist and chief economic advisor of Allianz. He tells us why he's favoring cash in his own portfolio. This is Bloomberg.
Scarlet Fu. What'd you miss? More and more investors are turning to cash, including Mohamed El-Erian, chief economic advisor at Allianz and a Bloomberg View columnist. He explains why in a Bloomberg interview.
I think you have to be much more tactical than you used to. And this is very hard for long-term investors. Long-term investors like to take advantage of the permanency of the capital, or the relative permanency of the capital, and take significant strategic and secular positioning and wait till the markets come to them. We're living in a world that markets have been so distorted that the value left in strategic positioning in public markets is a lot less than what it used to be. And if you're going to make money in public markets, you have to have a much more tactical bend to you. That doesn't come easily. But we've seen in January, February, that markets can fall out of love with public equities and public bonds really quickly if there is some dent to the existing paradigm.
So which asset classes in particular do you like?
So what I like to do is characteristics that whether they're companies or whether they're countries that have very strong balance sheets, business models that are adapted to the reality of today, and agile management teams. Those are the things that now, in most of the public markets, unfortunately, these attributes have been overvalued. So it's a very selective market. I think right now the right thing to do is to have more cash than you would normally and wait.
What would that be?
So I think in the range of 30% is where I would put a cash allocations for this particular part. Why? It gives you optionality about your strategic asset allocation, and it allows you to step in when volatility steps up.
That was Mohamed El-Erian, Allianz chief economic advisor, as well as a Bloomberg View columnist.
Joining us now for more on the dollar cash safety net is Bloomberg Gadfly columnist Lisa Abramowicz. Lisa, great to have you as always. This is a great story you have out today on Gadfly. The chart is incredible. I want to bring it up right away because it tells the story very well, as pictures usually do. This is the amount of cash held by investors around the world compared to the GDP of the biggest countries in the world here. I mean, this is incredible. So what's the implication of this?
Well, first of all, the $50 trillion number comes from BlackRock. Rob Capito, when he was talking on the earnings call earlier this week, said that there were $50 trillion or more of cash on the sidelines waiting to be deployed. This is money that can move very quickly if there is a change in the macroeconomic circumstances, say a rate rise or say some kind of disturbance. The question is this a safety net? Right? I mean, my knee-jerk reaction is, well, yes, right? I mean, you have people like Mohamed El-Erian waiting for yields to rise, waiting for valuations to sort of lower in equity markets around the world before swooping in and getting a better deal. I got a lot of pushback, though.
But how can that be if there's all this money waiting on the sidelines? As soon as valuations come down, people might swoop in. Buy the dip has been the story for years.
Right. So this goes back to sort of my response, which is this would support valuations, right? You think of the sort of cliche of cash on the sidelines being a positive technical factor, basically supporting valuations. However, I got a lot of pushback, and it was justified because people were saying, listen, this cash, first of all, it could be tied to risk. This could be collateral for derivatives trades, for example, that, they have put on. And perhaps the derivatives trades have actually increased more than the amount of cash that they have on the sidelines. Also, you have to think about right now, we have negative yields in Germany. We have negative yields in Japan. Around the world, rates are so low. People are worried about their ability to generate any return. So cash might be the best option. And frankly, it might remain the best option if, you see a sell-off, a more material sell-off spurred by specific corporate news or a macroeconomic event.
Yeah, it does. I get the safety net aspect of it. It's also a little bit distressing because, I mean, the cash is basically earning nothing. But yet it's still, to them, signals that they'd rather keep that there if it's under the circumstance in which a great majority of this is not necessarily part of a collateral or something like that. But let's just say they're keeping it there because they're worried about the outcome of putting it somewhere else. What are the signs we figure out to figure out if there's any sort of is that a reasonable thing to do? Is that going to pay off in some sense?
Well, if there is some kind of dislocation in the market, holding cash will pay off, right? Because then you're able to jump on an opportunity. I mean, private equity firms are now, according to Prequi are now holding more money in cash, have more dry powder raised to go in and swoop in and buy distressed loans than ever before. I mean, they are sort of trying to wait for that opportunity because right now you look around, it looks like a desert, right? I mean, what opportunities are you going to find? I just think that going forward, there's a question of if growth does not improve, right? You could see yields stay this low, if not lower, and you could see material losses if people are not able to pay off their debts or if companies go out of business that have high economic, have high valuations.
Or if inflation suddenly picks up as well, because with all this money sitting on the sideline, it's a pretty clear indication that no one sees inflation picking up anytime soon.
That's true. So if inflation picks up, these cash holdings lose value from a real perspective. And also the bonds would lose value. So the safe instruments that people have been piling into would be really badly hurt, whereas equities might do okay. And actually, we are hearing more people talking about equities as a possible surprise winner next year.
It's interesting because I was just going to bring up equities. When we talk about waiting for some sort of sign to put this cash to work, I mean, there have been a lot of opportunities over the past year and a half in the stock market. We've had 10% corrections, 2 of them. We've seen bouts of volatility, VIX spikes that we haven't seen in a long time. But yet, Bank of America has their own fund manager survey with cash, and guess what? It keeps going up as well. Was there anything specific that BlackRock pointed out that they see as sort of the biggest potential catalyst?
Well, they talked about interest rates and sort of the backdrop there. I think when I talk to investment managers, they also talk about Europe. You have the Italian referendum coming up. That could potentially spur a question about whether Italy will remain in the European Union. This seems like a potential big disruptor within the upcoming months. And, of course, you have the U.S. election. But other than that, I think it's really the central bankers and what they do on their journey of stimulus.
Very slow journey.
They're disruptive, but incredibly slow and exhausting journey.
Great stuff. Well, I don't think the story's going anywhere anytime soon, so we'll have you back. That's Lisa Abramowicz, columnist for Bloomberg Gadfly. For more of Gadfly's fast-paced, data-driven commentary, head to GADF Go on the Bloomberg.
It is time now for the Bloomberg Business Flash. Look at some of the biggest business stories in the news right now. Massachusetts Senator Elizabeth Warren has sent a letter to the U.S. Department of Justice concerning Mylan's $465 million settlement over Medicaid rebates for its EpiPen allergy shot. She says Mylan underpaid rebates by an estimated $530 million. She says the DOJ has imposed a fine, quote, that is about $65 million less than the amount Mylan made by defrauding Medicare and Medicaid. That's a direct quote. McDonald's third quarter revenue topped analyst estimates, helped by international markets like the UK and Canada, as well as the expansion of its all-day breakfast menu here in the U.S. Revenue was $6.4 billion, beating the consensus estimate of $6.3. Globally, comparable store sales rose 3.5%. Carol Burnett is close to a return to television. The comedy legend has signed a deal with Disney's ABC in a sitcom project that'll be executive produced by Amy Poehler. Burnett is 83 years old and has had a 6-decade run on stage and films and especially on television, where her Carol Burnett variety show aired for 11 seasons on CBS. And that is your Business Flash update.
Up next, companies are close to spending $1 trillion on payouts like buybacks and dividends this year, but most likely it's probably going to be a peak. We'll figure out what's going on next. This is Bloomberg. I'm Oliver Rennick. What'd you miss? Buybacks and stocks. We're going to take a look at a couple charts here, figuring out what's going on with shareholder-friendly activity. One of my favorite topics. We're going to start off by looking at the performance of some of these Bloomberg indexes that track shareholder-friendly activity versus the S&P 500. The purple line here at the top is the dividends aristocrats. That's on the Bloomberg, and that's basically tracking companies that spend the most on dividends. The blue line is an equal-weighted S&P 500, just to keep everything in line in terms of apples to apples. And then the final white line is the S&P 500 buyback index of companies that are repurchasing the most of their own shares. Because here's what's happening. You've had this surge in buybacks, shareholder-friendly activity that's going to lead to $1 trillion of executed buybacks combined with dividends this year. But it's looking like it's going to be pretty hard to keep up. That's Scar's part. But here I'm going to talk about what's happening in terms of the performance. Because for a while there, people were really loving dividends this year. You can see the peak in the purple line around July. People were going after those yields, chasing yield. That has slowed down a little bit as people, once again, investors start to look for companies that are buying back their shares. And they've got a lot of options because there's a lot of companies doing it, but their announcements for newer buybacks and new plans are actually fading a little bit, Scarlet.
And of course, as the Federal Reserve gets ready to raise interest rates, money won't be quite as cheap anymore. You might not be able to sell bonds to be able to raise cash to buy back those shares, which are also at fairly elevated levels as well. All right, well, Kevin Kelly of Bloomberg Data read your story and was inspired by it, so he put together this chart to kind of give us some context here. His takeaway from Oliver's story, which is available on Bloomberg.com, is that no matter how you slice and dice it, companies are not doing that well on the bottom line. So the blue bars are the profit margins for the S&P 500, and you can see that the peak was over in 2014. Matt, let's go over here, and this is the peak, and since then it's come down. It's pretty much held steady. It hasn't gone anywhere over the last 2 years. Now, if you look at it, we have been in an earnings recession, but margins have held up. Now, when you look at yields, though, and the earnings yield is the white line, and the free cash flow yield is the orange line, the earnings yield is the inverse of the PE ratio. As the S&P 500 has risen, and we don't have that line here, but you know what it looks like. It's gone up. Earnings and free cash flow haven't actually gone up with it. It hasn't risen as much as the S&P 500. So what he's saying is you're paying more for stocks and getting less earnings and free cash flow in return. So in this particular cycle, we're at the lows of the cycle when it comes to earnings yield and free cash flow.
I love it. And if we need a reminder of what the S&P 500 looks like, it's that white line there flipped the other way because that's the earnings yield.
Thank you. Oliver, always ahead of everything. Okay, the market close is next. Take a look at the major averages with less than 4 minutes to go before the close. It's been kind of an up and down day, although we've been in a pretty narrow range. We really didn't learn a whole lot from the central banks this week, did we?
That's right, and we ended up pretty much unchanged.
The S&P 500 literally unchanged right now. This is Bloomberg. closing bell. What'd you miss? U.S. stocks trimming losses but eking out a weekly gain. Microsoft closing at a record high, offsetting losses spurred by concerns a stronger dollar will damp corporate earnings. I'm Scarlet Fu.
And I'm Oliver Rennick.
And of course, we welcome our viewers who are tuning in live on Twitter. You can watch our closing bell coverage on Twitter every weekday from 4 to 5 p.m. Eastern time. Oliver would be watching it if you weren't on set with me.
And if Twitter weren't down right now, which it has been.
Good point. Ooh. Oliver with the breaking news. All right, let's begin with our market minutes. U.S. stocks closing the week mixed. Little change is really the way to phrase it here. But for the week, they did finish higher. 7 out of 11 major groups in the S&P 500 were down. Telecom, the biggest loser as well. And, of course, that comes on the heels of some pretty big M&A deal speculation.
Right. And I think when you look at today, up and down, but there was some pretty big news out there. We were obviously just talking about the tobacco deal. And with stocks, there were a few big movers that I want to jump into immediately. Just on the one-day moves, Microsoft had a great day here. New highs up about 4 3/10%. Big news, their cloud business doing pretty well, so that transition seems to be at least being well received by investors. That's the big part of their earnings. Time Warner, AT&T also talking about deals there, the potential for a takeover. Obviously, owners of Time Warner very much liking that, up about 8%. AT&T, as we were just talking a minute ago, this typically happens with an acquire. A lot of times it will go down, but still a pretty substantial move, about 3% loss right there. Then I want to flip it over next and look at what's been going on sort of on the broader picture. This is looking at the week, rather intraday here. Healthcare has not done very well this week. Telecom got hit pretty well. Verizon and AT&T not doing very well on the week. Healthcare, a little bit of speculation about what a Clinton win could potentially mean, especially if she takes Congress as well with her. And then the financials group on the back of some earnings. Not much today, but overall in the week, pretty solid. And finally, just real quick, looking at the VIX, this is pretty incredible. Given that there are still some big events out there on the horizon, the VIX just keeps going lower. It's pretty incredible. Now we're hovering, we're under 14. I mean, you still got the election, you still got Fed, but stock investors, options traders at least, not real worried about it, I guess.
More complacency, right? All right, let's move on to the bond market here. We're seeing a flatter Treasury yield curve. The 30-year is outperforming shorter-dated debt. You can see there the lower yields for the 30-year as compared to, say, the 2-year. This week, as you know, the ECB signaled an abrupt ending to QE is unlikely. That was, by the way, the flatter yield curve idea, the theme around the world. We had curves in Japan, Germany also flatten as well. I wanted to highlight what's been going on in Europe. Take a look at Portuguese bonds. This is the yield on the 10-year. The bonds gained, so of course that pushes yields lower. This was before and after the ratings company DBRS kept Portugal at BBB, which is its lowest investment grade rating. So it also maintained the stable trend. What this means is that Portuguese sovereign debt remains qualified for the ECB's bond buying program. The ECB can buy it in its QE program. The other 3 ratings companies have already downgraded Portugal long ago to junk, but it doesn't matter. As long as one major ratings company has rated Portugal investment grade,
it's still
QE is okay.
It's still within grasp of the central bank. All right, I'm going to look at commodities. Pretty big moves here as well today. Nat gas just getting crushed. A few things going on here. One, the idea that there's going to be some warmer weather, unseasonably warm, which, hey, I'm cool with that in New York.
It was 80 degrees the other day.
Right, but if you're owning nat gas, obviously not as much usage there. So pretty big move down. Then we're also going to take a look at what's going on with oil as well. A little bit of fluctuation, but ultimately up on the day, trying to figure out what's going to be going on with the producers there. Of course, we've been talking about OPEC a lot as well. Whether or not there's actually going to be the sort of agreement to limit supply, as we've talked about, still up in the air. And then some news from Russia as well today. But overall, the commodity index, pretty solid off the lows from earlier in the fall. A nice little rally that's helped as well some other markets with equities doing pretty decently in the energy space, a little bit of a rebound there.
Okay, and in currencies, the theme has been and is dollar strength. You're looking there at the euro, extending its decline. It briefly spiked, of course, on Thursday after the ECB rate decision, but we're looking at a third straight week lower for the euro. And if you come inside the Bloomberg, the euro, of course, reaching an interesting level here. This is the intraday trade, so you can see the high, low, and the close and the open. The euro weakened past the level it fell to the day after the Brexit vote. That was June 24th, and it's now at a 7-month low, so the lowest since March 10th, when the euro fell to as low as $1.0822. Right now, the euro at 108.63. There we go. Okay, and a quick mention here of the Chinese yuan. It's now at a 6-year low versus the U.S. dollar. The onshore yuan has actually fallen in all but one session this month. As you know, the People's Bank of China had allowed depreciation past the 6.7 level. People thought that was a line in the sand. Clearly, it's not anymore.
I know a lot of people that are concerned about that red right there because there aren't a ton of folks talking about it as there were back in 2015.
Yeah, maybe that will be the stealth move. All right, that does it for today's Market Minutes. Let's take a deep dive down to the Bloomberg. You can find all the following charts using the function at the bottom of the screen. You're going first, right?
Yeah, I don't know if we intended that transition, but it's very smooth because I'm looking at currency volatility. The yuan obviously has been moving down, a little bit more depreciation there, but actually I want to look at a basket of currencies in my Bloomberg terminal right now versus the volatility in the S&P 500. So the white line we're looking at here on the top, this is a basket of about 7 currency pairs versus the U.S. dollar, euro, cable, yen, yuan. The loonie is in there as well. It's a nice variation. The blue line right below it is the S&P 500 volatility. We're looking at, by the way, 3-month implied vol. This is basically like think about it as like a 3-month VIX kind of. The spread is at the bottom. Here's the takeaway. The white line at the top has been pretty high throughout the past year. Even though it's come down from the volatility surrounding Brexit, it is still elevated. Meanwhile, the volatility on the blue part, the VIX, rather, this 3-month VIX, if you will, is pretty low. The spread is very wide. This doesn't really happen too much. Typically, there are a lot of investors who think that currency market volatility sort of portends equity market volatility. Something's got to give here.
Something's got to give. That seems to be the theme for a while now. I'm taking a look at global yields, and the idea that something's got to give is there, too, as well. We know that's been one of the big themes this month. And thanks to Dan Curtis for putting this together. It was inspired by something that Richard Breslow, who's a former FX trader who now writes for Bloomberg, wrote in his daily note. Sovereign 10-year yields have a lot of technical levels where you can find resistance points to meet your view or fit your view. He says you want to watch a 200-day moving average, the long-term trend line, in the U.S., in Germany, in the U.K., and in Japan. And as you can see, they're all pretty much right around those levels. And I'm going to zoom in here so you can see. In some cases, the 10-year went above it and is just about to break below. The Bund, of course, has gone above it. The gilt is very close to it. The JGB is near it as well. What is driving global bond yields higher? That is the big question. Is it anticipation of a change in central bank policy? Let's discuss now with Torsten Slok. He is Chief International Economist at Deutsche Bank. So we've got this global bond yield story where they've been moving higher. What do you attribute it to?
So I think what's becoming clear is that the U.S. continues to insist that the Federal Reserve is going to hike rates. So with 3 dissents at the latest FOMC meeting is a very strong signal that something is happening. I think, therefore, that markets are slowly trying to understand this challenge of, are rates actually going to go up? The global liquidity coming from the ECB and BOJ is holding U.S. rates down, but fundamentals in the U.S., inflation, the labor market, basically all points to more upward pressure on the Fed hiking rates, and therefore ultimately also maybe rates investors should start to think about pushing rates up.
Torsten, it sounds like you think that investors right now are underpricing the risk of higher than expected inflation and perhaps therefore maybe the trajectory for interest rate paths. Is that sort of a fair assessment?
Absolutely, because think about it, my job is to advise clients of which risks in markets are not priced at the moment. And no matter where you look, there are basically nobody who believes that we're going to see inflation everywhere. Oh, it will not happen. We have secular stagnation, low productivity, so we will not see inflation in any significant way. And the chart
but the data points otherwise.
Yeah, the chart here shows you that, so the yellow bar is inflation in basically the first 9 months of 2015. The orange is inflation in the first 9 months of 2016. And the blue bar is the latest observation we have for inflation. As you can see, across all measures of inflation, core inflation measured in various different ways, we basically have the trend that there is an upward move in inflation. And I think that's exactly what global bond markets are starting to realize. That is there an upside risk? Most importantly, Janet Yellen and company continues to say the target for inflation is 2. So core PCE, which is their main measure of inflation, is at the moment 1.7. Is that the white of the eyes of inflation? Should we wait a little bit longer? They famously say we should wait until we get close to the target, but is 1.7 close enough? And the Cleveland Fed says that the October number for core PCE will be 1.8. So now you ask, how close do you have to get to 2 before the Fed will start moving?
They need to take a look at your chart over there. Torsten, how much coordinated messaging is there right now, do you think, between the world's major policymakers?
Well, I think that that's a very important question because it is very puzzling what the ECB is doing at the moment. As you just said, Scarlet, he Draghi basically said yesterday that, well, we will not end our purchases suddenly. But is that a cryptic way of saying we're about to taper? Or if it was so,
commit to that.
well, if it was so obvious that they would just continue with the same amounts away throughout 2017, why didn't they just say it at the meeting yesterday, or for that matter, at the meeting in September? So the fact that they are sort of tiptoeing around the issue here makes you a little bit worried that maybe they have some reasons for being cautious. And of course, the discussion could be, well, they could just wait with that decision to December. But as we all know, markets don't like uncertainty. And there's a lot of uncertainty involved with if they do start to taper. The biggest fear, I've been traveling a lot this week, the biggest fear I hear in meetings wherever I go is, will we get another taper tantrum, similar to what we saw in 2013? Remember in 2013, the only thing that happened was that Bernanke started talking.
Right.
Nothing else happened. And now Draghi is sort of talking. And you're wondering, is he trying to say that maybe we will also be tapering in Europe? And if that's the case, the risk could be that we will therefore see more volatility in markets, apropos also the low vol measures that we have seen up to this point.
Torsten, so when you talk about the potential for a taper tantrum here, clearly we've got very low yields right now. When you just look at 10-year treasuries in the U.S. Relative to where they were the last time we hiked in December. Of course, they've come down quite a ways. We've sort of talked about this idea that now the floor for yields has moved quite a bit further than a lot of people expected. But what does that sort of tantrum look like at this level, where we know that last time we hiked, yields then went even further? There was sort of quite the opposite, right? How much is the market pricing in that it shouldn't be? How do you maneuver around this potential catalyst?
Yeah, this is a very important question. For many years after the crisis, we were all saying, and the Fed narrative was that, oh, we just need to clean up the housing market, then we'll be fine. We just need to clean up the banking sector, then we'll be fine. And we just need to clean up consumer balance sheets. Reinhard Rogoff wrote the important book in 2009 that said it's just a temporary issue, and then rates will go up and inflation will go up. Now, I think it's to huge frustration for the central banks and us in markets that we've been waiting for a long time, and the wolf has basically never arrived. So now we have changed the narrative completely. Now, in most meetings I have, people basically say, you know what, they will never hike. They will never be able to hike. Rates are going to be low. If you look at your Bloomberg screen and see what the Fed fund futures are pricing, as you know, if you type dots, you can see the dots are basically way above where market pricing is. And that's telling you that markets just don't believe that they will be able to hike. So therefore, to your question, have we gone from way too optimistic to too pessimistic? And therefore, it doesn't take much in that environment of positive news or a little bit higher inflation. And maybe the market will say, gee, they are actually going to hike rates. And gee, maybe the ECB is even going to taper at some point.
Torsten, I've noticed that when you come on, you like to refer to the onset of inflation as the wolf is coming. Maybe if everybody picked up on the syntax, we'd be a little bit more worried about it. Stick with us. We're going to talk more about it. Torsten Slok of Deutsche Bank is going to be with us with more.
Okay, we'll be right back with much more. This is Bloomberg.
I'm Mark Crumpton. Let's get to First Word News. Some Facebook employees wanted Donald Trump's posts removed for violating the site's rules on hate speech. That's according to a report in the Wall Street Journal citing people familiar with the matter. CEO Mark Zuckerberg ruled in December that it would be inappropriate to censor Trump. Some employees reportedly threatened to quit over the issue. 3 of 8 election swing states, Ohio, North Carolina, and Michigan, saw their unemployment rates rise in September. Nevada and New Hampshire saw declines, and the jobless numbers were unchanged in Florida, Iowa, and Pennsylvania. The figures reflect broader trends that were evident in the latest jobs report that hiring has slowed from last year's healthy pace. U.S. Coast Guard officials say they'll examine lighting on the Miami Beach jetty where Marlins pitcher Jose Fernandez and 2 other men were killed in a September boat crash. The Coast Guard will perform a new analysis of the jetties at the entrance to a channel that runs past the southern end of Miami Beach. Iraqi forces have raised the national flag over a church in a town near Mosul retaken from Islamic States. The militants had sprayed graffiti on the walls and the floors were littered with dirt and garbage. Christians have been forced to convert to Islam or pay a special tax. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Oliver, back to you.
Mark, thank you. We're back here with Torsten Slok, Chief International Economist at Deutsche Bank, continuing to talk about Fed, inflation, the wolf that's coming. But first, let's look at the language from the FOMC minutes and how the Fed is sort of gearing up for this potential move here. You can see this chart here that's basically showing the use of gradual, cautious, all these terms we associate with hikes are getting more and more. It kind of feels like the FOMC has to hold on to the markets like a child learning how to swim every time they want to hike. Is that discouraging?
I would say that this chart here illustrates very well what they're trying to achieve. I mean, we counted the number of times that in the minutes they mentioned the word gradual, how many times they mentioned the word cautious. Of course, you can take the dictionary out and find other words that basically explain the same. But as you can see, we had a clear trend that up to the hike in December of 2015, they were becoming more and more gradual and cautious. Then it fell off a little bit in the beginning of this year, and the last several meetings we've had the exact same pattern. It tells you that they want to tell you that we are probably going to hike in December, but after that we'll be very gradual and cautious. Don't run away and think that rates are about to move up dramatically in the long end of the yield curve.
So in other words, they're basically telegraphing to the market what you had as your expectations is correct. What we had in the dots was wrong.
Basically, I mean, another way of saying that is that they are indeed, and there are many good reasons to be cautious, and there are many good reasons to be gradual. But I think that the last thing that the Fed wants to get to at this point, they don't want to disrupt financial markets. They don't want to disrupt the hunt for yield and the reaching for yield that we've seen globally. So therefore, by signaling very clearly that, don't worry, rates are not going to go up, we will be slowly moving things higher, it's only very gradual, then hopefully investors will be cutting their coupons in bonds and holding onto their stocks without seeing that significant sell-off in risky assets that we all fear.
I wonder, I was just going to bring up WIRP WIRP real quick. Got to do it. You're looking right now at roughly a market percentage chance of about 70% of a rate hike. You just add up the sum of these two lines here. And that's where we're at. It's the highest really in almost a year. So the question is now the risk factor here if we don't go? And what are the sort of events that could happen between now and then that might derail us? Because it seems like the market is pretty well convinced it's going to happen.
Absolutely. The Fed must be very pleased with this chart because this chart clearly says that they have a mandate here now to raise rates. And raising rates, there are many good reasons for doing that. Namely, we are close to full employment. We are seeing inflation slowly move higher towards their target. And on top of that, if they raise rates, they will have more ammunition if they need to lower them later. So this is indeed a very, very important precondition for the Fed hiking rates. And that's why, to your point, last meeting, this was well below 50. So it was very difficult for them to raise rates. So this is indeed a very, very important input in their discussions and considerations.
What matters now to the Fed? I mean, we talk about how there's a dual mandate for the Federal Reserve as opposed to the ECB, which is fixated on inflation. The Fed has to consider full employment and inflation. Which one weighs more now? Has there been a shift?
Yeah, this is a very important issue. The traditional economics textbook would tell you that if you just take a so-called Taylor rule and you look at what are the inputs into what they should do, it's just inflation and unemployment. The thing that has become very difficult is that over the last 6 or 7 years, many people in financial markets have been on a hunt for yield. So the question becomes, apropos the taper tantrum discussion we just had, the question has become, if they do hike, Are we going to see a lot of people who say, hey, why did I buy investment grade and high yield if I can actually be in lower risk-free rates, namely treasuries? So therefore, will we see all the tourists who went into IG and high yield, will they be coming back to risk-free rates? And this issue around financial stability and financial instability becomes very, very important. So the third mandate, if you will, other than full employment and inflation at 2%, is namely this issue of communication. How are they communicating and calming down financial markets and say, don't go and sell off the stock market, don't go and widen credit spreads, because we will only do this gradually or cautiously.
To prevent another tantrum.
Exactly.
When you look at wage growth, something else that you watched, and I want to pull up the final chart that you sent us, because this is interesting. I want to, if you can, sort of talk about how this could potentially also affect the corporate landscape as well, because this is, you want to see that wage inflation. This is a big part of it. But at the same time, there's a feedback effect where you have cash-strapped corporations and margins that are getting smaller, and companies that have already cut wherever they can to get those margins where they are, and they're kind of running out of steam. What happens when that number keeps going higher and that line gets even steeper in the corporate space?
Yeah, so the first point, of course, is that the Fed is worried about inflation. And as this chart here illustrates very clearly, they should worry about also wage inflation, because wage inflation is now at 2006 levels. But the general answer to your question is that higher wage growth also means higher income growth, and therefore for companies should also mean higher top-line growth. So in some sense, this is what we've been waiting for a long time, namely top-line growth should get a boost as wage growth also gets help.
Is there a level, though, at which it has some adverse effect on the corporate landscape?
Yeah, and absolutely. And of course, a lot of the anecdotes from this earnings season have been that we're hearing more pressure on wages and what does this do to margins. But it touches on something very fundamental in terms of how we think about companies. Do companies act on as if they want to protect their profit margins? And it doesn't seem to be the case normally. Normally, companies are much more eager to invent new products, look at what's in the pipeline, try to have new innovation. All those things basically are more important than protecting your margins. If companies only wanted to protect their margins, they could basically fire a lot of people and margins would be a lot higher, but the long-run prospects of that are not very good. So therefore, I think that it's not only about margins, it's also about the general business environment and what are the prospects for corporates in terms of inventing new things and doing things well.
I need to bring in some headlines here from John Williams of the San Francisco Fed, whose stature has really risen in the last couple of months here, Torsten. John Williams speaking with reporters after a San Francisco speech, saying that he was actually ready to go in September with a rate increase. He was not one of the dissenters, but he says he was ready to go. And he also says that it is essential that the Fed shows it can hit 2% inflation, but he's not losing sleep if the Fed overshoots 2% inflation. What does that mean, that the Fed can show it can hit 2% inflation?
Yeah, I think this is very, very important, because remember that the Fed has now in September clearly signaled that they are willing to run the economy hot. And they may be rolling back their thumbs and saying, okay, we'll run the economy hot, let's wait a little bit longer and see inflation overshoot. But the key question for markets is, will treasuries also allow that overshoot to happen? Or will we have that 2 or 5 or 10-year rates wake up and say, hey, if they're going to allow an overshoot, maybe there's a risk that it will erode the value of my portfolio, and if I see an erosion of the value of my portfolio, then we have a problem, and maybe therefore the Fed is behind the curve. So maybe, as he says, maybe he's not sleepless over inflation not being 2%, and maybe he can allow himself that luxury of saying we'll wait a little bit longer. But the key uncertainty is, what about markets? Will markets suddenly say, gee, it looks like they're behind the curve? And if it looks like they're behind the curve, the risk is that markets could start to have the yield curve move up.
Torsten, it sounds like you and John Williams might be somewhat in the same camp, or maybe the inflation picture is a little bit higher than we thought. Thanks so much for coming on. Great stuff. As always, Torsten Stock, he's a chief international economist at Deutsche Bank.
Coming up, could European banks rally 50% in 2 years? One equity strategist has identified an interesting pattern. We'll show you where he sees the upside. This is Bloomberg.
I'm Oliver Rennick. It's time now to show us your favorite G charts on the Bloomberg. I'm going to start by talking dollar and stocks. This comes from Larry Perizzi at Mishler Financial in Boston, a regular source of mine on the stocks team. And he's looking at something that he thinks has generally been the big mover for the stock market this week. And I happen to largely agree. This is sort of the story. You look at what's happening here with the dollar and stocks. This is intraday for the past 5 days. Now, markets did pare back their losses and ultimately did do a little bit better on the day. But what happened is we basically woke up and we saw a market here where it seemed like there were some jitters around the idea of higher rates. The dollar has had a pretty solid move here. Obviously, a rate hike would exacerbate that move higher. You already have a little bit of questions about some of these multinational companies and their earnings, and higher dollar, not going to be good there. That's from Larry Perizzi, and that's pretty much the story, that higher dollar, not great for multinational stocks.
We haven't really heard any commentary from the CEOs on that this earnings season, have we?
We haven't heard a ton of commentary in general in terms of guidance. The dollar definitely has been mentioned a few times, but it has been sort of the one thing that has been mentioned by several different companies.
All right. For my deep dive, I'm taking a look at European banks, because we talked earlier this week about how they moved above their 200-day moving average, their long-term trend line. Here's another technical indicator that's supportive of this sector. This is a double bottom in the parlance of technical analysts. That's when something falls, it rebounds, it slides again to a similar low, and then rallies from there. And according to Barry Bannister, the chief equity strategist at Stifel Nicholas, this is a bullish trend, and he believes that banks, European banks, could rally 50% by mid-2018 if the issues gripping some German and Italian banks are resolved. Now, that's a huge
pretty big if.
It is a huge if, but the interesting thing is he's not the only one who sees some value in European banks, because Bank of America Merrill Lynch upgraded the sector to overweight as well. They say it's for tactical reasons. You want to capture that dividend yield, and you want to capture the turn up in global bond yields. But definitely European banks are getting some love here.
There you go.
All right, coming up next, investors in Europe seem more confident that unprecedented stimulus will continue beyond the planned expiry date.
I'm Mark Crumpton. Let's get to First Word News. Donald Trump has taken a swipe at First Lady Michelle Obama. During a rally in North Carolina today, Trump said, quote, all she wants to do is campaign. He then accused her of attacking Hillary Clinton during the 2008 primaries. He was referring to Mrs. Obama's comment, quote, you can't run your own house, you can't run the White House, which Trump said was aimed at the Clintons. The Obamas have denied that. Hillary Clinton has a new ad featuring the father of a U.S. Army captain killed in Iraq. Khizr Khan was repeatedly criticized by Donald Trump after he spoke at the Democratic National Convention about his son, Captain Humayun Khan, and about Trump's proposal to bar Muslims from entering the U.S. Mr. Khan asks at the end of the ad, "Mr. Trump, would my son have a place in your America?" The divisions between the UK and the rest of the European Union have begun to take shape, with Germany warning that Britain faces, quoting here, a difficult path following June's Brexit vote. In Brussels, UK Prime Minister Theresa May said to reporters today at the conclusion of her first EU summit since she assumed power.
We still want to trade freely in goods and services with Europe, and the UK will continue to face similar challenges to our European neighbours. We will continue to share the same values, and so I want a mature, cooperative relationship with our European partners.
The Prime Minister also said that while the UK isn't leaving the EU, is leaving the EU, rather, it's not leaving Europe. The Defense Department says a U.S. naval warship has conducted a freedom of navigation operation in the South China Sea. That's where China and 5 other countries have competing territorial claims. A spokesman says the transit operation was near the Paracel Islands. Vietnam, China, and Taiwan all claim the islands, which are occupied by China. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in over 120 countries. I'm Mark Crumpton. This is Bloomberg. Oliver?
Thank you, Mark. Let's quickly get a recap of today's market action, which, after a lot of fluctuation, stocks at least didn't really go anywhere. The Dow Jones ended up down about 9 basis points. The S&P completely flat, basically adding to a little bit of weakness that kind of peppered throughout the week, but ultimately a little bit of positive. NASDAQ up about 30 basis points, and then yields as well came down on the 10-year, down about 120 basis points to 1.73% on the 10-year. Then we also, just as we broke the news, John Williams from the San Francisco Fed, talking about how he's very comfortable with inflation. He's very comfortable with the economy running a little bit hot, as we heard the Fed talk about earlier, and that ultimately he was ready to go in September. So a lot of interesting stuff, and I'll hand it over to you, Scar.
Have been a lot of movers when it comes to the major indexes. Microsoft stock, however, ended the day at a record high after quarterly sales and earnings topped analyst estimates, driven by growing demand for cloud-based software and services. So let's dig into Microsoft in today's The Numbers Don't Lie. So Microsoft has been growing its intelligent cloud segment. Sales rose more than 8% in the fiscal first quarter, beating the average analyst estimate. Revenue from the Azure cloud services more than doubled in the period. And the cloud is really helping Microsoft outperform, even as demand for personal computers remain in the doldrums. And you can see here a commercial PC-related product growth, which is the orange bars, not very big bars in the last quarter, you can see there. And consumer growth, the yellow bars, basically flat in the fiscal first quarter. In the meantime, though, Microsoft has made an overall return to revenue growth, which may be an early sign that this transition to more cloud services by the CEO, Satya Nadella, is starting to pay off. Now, let's not forget that Microsoft this year made its largest deal ever when it announced its $26 billion acquisition of LinkedIn. It's an expensive purchase and therefore sets a high bar for Microsoft to prove that LinkedIn is worth it. The deal has the highest earnings multiple of any takeover, valued at least $5 billion this year. Microsoft valued LinkedIn at more than 84 times EBITDA. Clearly much bigger than anything else that we've seen over the last year. Now, despite some opposition from others in the industry, including Salesforce CEO Mark Benioff, Microsoft expects to close the acquisition of LinkedIn sometime this year. Oliver?
Thank you, Scarlett. What'd you miss? It looks like Portugal will get to keep its investment-grade rating, ensuring QE eligibility in Europe. Canadian rating agency DBRS kept Portugal's rating at BBB low. This comes after European Central Bank President Mario Draghi said Portugal's debt wouldn't be eligible for purchase if the country couldn't keep that investment-grade rating by at least one major ratings company. Joining us now from London is M&G Limited Fund Manager Eric Lonergan. Eric, thanks for coming on. This is pretty interesting because it feels like the ECB just really wants to have as many eligible bonds as possible here. What does that tell you when they're willing to reach to a company, or rather a country that only has one rating that's met its requirements?
Hi, Oliver. Yeah, I mean, well, I think what it reflects is actually how successful Mario Draghi has been at really achieving the near impossible, which is, how does the the central bank provide a backstop to sovereign credit risk at the same time as avoiding moral hazard. And he seems to have been able to do that, which is you have this system now in Europe of essentially conditional QE, which is as long as you meet the fiscal requirements and as long as you have investment grade status, you're effectively a risk-free asset because you're backed by the European Central Bank under the QE program. But there's still an incentive structure, which means you have to get your house in order. And Portugal is kind of, straddling that bridge. But it's very clear now that Mario Draghi's QE is kind of mission accomplished at this point, because there's been no sovereign contagion from Greece a year ago or from Brexit. So the kind of firewall around the sovereign system within the Eurozone appears to be working.
I like how you put that, conditional QE. The question is whose conditions, and will those conditions change? What might cause them to change?
Well, this is it, and it's really up to member states. So in the Portuguese case, Portuguese bonds still pretty much behave like credit risk. Now, most of the other major sovereign bonds in the Eurozone behave like a rates market. They behave like treasuries or like JGBs. But Portuguese bonds are still, at that crossroads where it's very much dependent on the path that Portugal takes. So if Portugal wants to create a collapse in its cost of borrowing and bring those spreads down, it has to improve its credit rating and improve its fiscal position. So, but I do think it's important not to underestimate what Mario Draghi has achieved, which is this system does seem to address concerns that, particularly parts of Northern Europe have had about QE creating the wrong incentive structures, whilst at the same time kind of ensuring that the financial system was pretty robust in the face of shocks. And I think Draghi has absolutely succeeded in that. I think the big question from here is that financial stability has been obtained through QE, but there's a question mark now if the ECB needs to provide additional stimulus to the economy, because it's not clear whether QE can really achieve that at this point.
Eric, I would just to take it back to the first point, and I completely get what you're saying. In terms of being able to find bonds that are eligible for this program, and still setting up this, as you say, avoiding the moral hazard by having some standards. But then you have a country like Portugal where you have a handful of rating agencies saying that they don't meet those standards. And then you have one that say they do. You're a fund manager. If three analysts came to you on a company, or four, and three said that this is not a buy, and one said buy, and you took it, would you not be taking on a little bit more risk than you want?
Sure. I mean, that's a very good question. At the same time, I think there are political realities, and the ECB has a very careful balancing act. And ultimately, it has to be the judgment of the ECB, in fact. So it's not even a done deal. Were all the rating agencies to change their ratings, that the ECB could, of course, it has its own independence and flexibility. It could decide to overrule that. But I think at the same time, they do want to be seen to have some kind of external verification. But your point is absolutely correct. Portugal is not in the clear. Portugal has to try and maintain its rating, and it has to stick to the fiscal rules that have been set by the European Commission.
Portugal's not in the clear, and of course its yield curve is a lot steeper than those, say, in Germany or in Italy. And if you come inside the Bloomberg, you can see how far away Portugal is from everyone else. Portugal in green, of course, and the German bond yield curve in blue. It's the flattest one. The white horizontal line, by the way, is 0. And anything below that red line is what Mario Draghi and the ECB cannot buy in their QE program. Did Mario Draghi ensure that, well, maybe not ensure might be too strong a word, but did he want to keep Portugal at investment grade in order to make sure that there was no shortage of bonds that the ECB could buy? Because that's been another big concern.
Yeah, I don't think that's his primary motivation. I mean, I think that the ECB, I think, is reasonably pleased with the way things are going at the moment, because there are signs of life. If you look particularly in things like in Italian industrial production, areas of the European economy that have been very, very depressed are starting to show signs of recovery. We're starting to see a pickup in credit growth. So broad indicators are starting to improve. And I think that they really do not want to upset that state of affairs. So I think they're absolutely keen that there's no additional shocks and for Portugal to stay, on plan is precisely what Mario Draghi would want. I think there was one very interesting comment he made in response to a question about the tapering rumors, which was where he made it absolutely clear that monetary policy is not driven by the profitability of the ECB. And I think that's very interesting because that shows that this current rule that they have, whereby they can't buy bonds that are yielding less than the deposit rate, is really arbitrary. And that was a suggestion to me, closely reading between the lines, that they may well be, willing to show some flexibility on that. And that would, of course, significantly increase the scope for bond purchases as well.
Last question here, Eric, as kind of shift gears a bit here. Let's take it further east. Let's talk about the Bank of Japan. What do you think is what do you think we have in store here in the short term from the Central Bank of Japan?
Well, I think Japan is the one to watch, because if you look at global monetary policy, it's pretty clear what the Fed is trying to achieve currently. It's pretty clear what the ECB is doing. But Kuroda at the BOJ is the kind of hyperactive central banker who tends to come out with a new radical policy, every 3 to 6 months. And I think what he did at the last meeting was extremely significant. So by targeting the 10-year yield, that is effectively a blank check to the Japanese government, which opens up huge scope for fiscal stimulus were they to take advantage of that. But the other thing is by kind of doubling up on his inflation target, that suggests that he's going to have to do more, because at the moment, if you look at core inflation excluding taxes, it's actually down year to date in Japan. So his degree of conviction and activism suggests to me that people are very vulnerable to another surprise. And I'm certainly thinking in terms of, as an investor, positioning myself from further moves from the Bank of Japan.
All right, Eric, great stuff. Thank you so much for joining us on this Friday. That's Eric Lonergan. He's a fund manager at M&G Limited.
Coming up, Hillary Clinton and Donald Trump took a break from a harsh election season to engage in a lighthearted roast last night, but some jokes didn't go over quite so well.
Michelle Obama gives a speech, and everyone loves it. My wife, Melania, gives the exact same speech. And people get on her case.
What'd you miss? Donald Trump and Hillary Clinton came together again, but this time it wasn't to debate. It was actually to tell jokes. The occasion was the Al Smith Dinner, a charity event famous for its roasts. Both White House hopefuls took their shots at each other, but also at their own campaigns.
Donald, after listening to your speech, I will also enjoy listening to Mike Pence deny that you ever gave it.
Joining us now is Tolu Olorunipa of Bloomberg News from Washington. Tolu, this is a fun event. It's supposed to be, a sort of cordial event. What happened last night?
Well, this is a lighthearted opportunity for the two of them, both candidates who have been involved in a pretty harsh and biting campaign to sort of take a more lighthearted approach to their political differences. We saw Donald Trump make a few jokes and Hillary Clinton do the same. It started off very lighthearted, but as the night wore on, as the jokes wore on, they became a little bit more harsh, and we saw Donald Trump get booed for some of his remarks, some of his jokes, calling Hillary Clinton corrupt and saying that she hates Catholics. That didn't go over so well with the crowd. Hillary Clinton was received a little bit more favorably by the crowd. Her jokes were mostly seen as funny, and she took some harsh attacks at Donald Trump as well. But for the most part, she was able to get through it without any boos.
Tolu, just clarify, who was that crowd exactly, for those of us who weren't there?
This is the Al Smith Dinner. It's an annual event in New York. It raises money for Catholic charities. So basically, it was a charity event, and it's usually in good humor. People come up and they spend a good amount of money. This is a New York elite crowd, spending as much as $3,000 for a seat and for a table there, raising money for Catholic charities. It's a crowd that's very well known to both Donald Trump and Hillary Clinton, who are part of the New York elite society. They both live in New York, and they both have a lot of good friends who are at that dinner, people who are part of media, part of business, and part of the philanthropic community there in New York.
Right, so a familiar crowd for both of them as well. So probably not a lot of undecided voters listening to the roasts or the lighthearted roasts. Was this the final occasion in which both Hillary Clinton and Donald Trump would be together in a room? Because there's no more debates. I mean, this charity dinner is over, and now they go on their separate ways and continue campaigning?
Yeah, most likely this is going to be the only time between now and November 8th that we'll see the two of them together in any form. We saw at the debates, the most recent two debates, they actually didn't even shake hands. So last night at this charity dinner, they did shake hands. They did spend some time chatting with one another, and it seemed like a much more cordial event. But as soon as that was over, they got back on the campaign trail, and we're going back at it once again. Donald Trump hearing crowds say "lock her up" once again, as he's heard over the course of his campaign. So between now and Election Day, it's sort of all gloves are off, and we'll continue to see kind of the harsh campaign that we've seen for the last few months.
The gloves are off a long time ago.
Right, yeah, no surprise there. But they do have a few more weeks here until the election. I saw some headlines about Donald Trump sort of addressing the issue of whether or not he's going to accept the outcome of the election. What's sort of the latest on his take on that?
He's continued to double down on this whole line of there being voter fraud and the fact that Hillary Clinton may try to rig the election and Democrats may try to steal the election. But here we saw him today say something that we haven't heard him say, which is that he's going to keep on campaigning win, lose, or draw. He sort of floated the idea that he may lose this election, which is what we're seeing in the polls. So it may look like Donald Trump is starting to come to the realization that in 2 weeks he may not be the victor in this race, and it's something that he seems to be rationalizing, and that's something that we haven't heard from him in the past, and so far it looks like that's something he's going to be doing as he gets closer to November 8th.
Right. I thought the same thing. It seemed like it was the first time we've heard him sound a little bit defeatist. Tolu Olorunipa of Bloomberg News in Washington, thanks so much for joining.
Coming up on What You Missed, Algebris Investments founder and CEO Davide Serra rates Deutsche Bank CEO John Krein's performance in navigating the troubled waters for European banks. This is Bloomberg. I'm Scarlet Fu. What you missed? Shares of Deutsche Bank in Frankfurt have basically pared all of their losses since the Department of Justice sued. Algebris Investments founder Davide Serra says that he expects a $5 to $6 billion settlement when all is said and done. He has faith that CEO John Cryan is the right person to navigate Deutsche Bank through this situation.
I've known John for many years. I worked with him the first year of my career, so I owe him a lot. I'm actually doing financials thanks to John, ultimately. And I think he's the best man for the job because basically Deutsche Bank has been led by Ackman and Anshu Jain that had Napoleonic ambitions. They wanted to put a flag in every country on the planet, basically to say that Europe needed a Goldman Sachs to justify themselves Goldman Sachs paychecks with very abysmal performance. John is the opposite. He will look after the interest of the company long term. He will shrink it, cut costs, and ultimately Deutsche Bank is needed for German corporation to do business abroad internationally. It's not needed by U.S. corporation. And so what I think he will do, he will further shrink the balance sheet of the investment bank. I expect ultimately the investment bank to shrink by 30 to 40% its risk-weighted asset.
Okay, this is really important, folks. We're going to rip up the script here right now with Davide working with Mr. Cryan years ago. I would suggest, Davide, that the single distinction here of Mr. Cryan, and I'd also give a major shout-out to James Gorman and Morgan Stanley, is simply math acuity. These guys are math guys at first, where they see within the framework of their institution the dynamics and the need for change to make those dynamics work. Within the mathiness of John Cryan, how does he get others who are not like him, not as acute as him, to make those structural changes?
I think first of all, for Deutsche Bank, they do have a couple of businesses which are very profitable. Forex, trade finance, they have a good German operation, they have a good asset management, wealth management. So they do have some pillars. The issue is that the investment banking has been oversized. And so there, I think what you have to do is to go in what I would call a UBS and Morgan Stanley type of diet. You shrink your risk-weighted assets, cut your costs,
but Davide,
it's doable.
Not to interrupt, but I think this is really important. How does Cryan give an entrenched Deutsche Bank management the courage to make those decisions?
I don't think they have any choice. Their own CDS at 250 basis points above U.S. peers basically tells Deutsche Bank they cannot be in that business long term. And ultimately, their funding advantage that Deutsche Bank, abused, in my view, over the last 20 years, is gone. As a result, they don't have any choice.
But so what's the incentive for people for retaining talent? Because if he really starts losing talent, then he's in trouble.
Talent, this is an industry that has too many people. When I hear people, you're losing talent, I think that's not the case. Because the reality is, in Europe, everybody will have to shrink operations in finance. Lots of businesses from London will go back to New York. And as a result, if you work in Deutsche Bank, you're happy to keep your job. And these are, anyway, overpaid people in absolute level. As a result, the last thing I would be worried is compensation and talent. You just need to keep the boat together. And actually, that's very unique. I hear from Deutsche Bank the morale is very high among senior management. Why? They have a sense of purpose. They see a CEO that flies, not in private jet, but with proper planes, that it's serious, aligning everyone's interest, and it's, everybody on board to save the ship. So I think actually Deutsche Bank will come out of it stronger. And the last 20 years of glitzy, of Deutsche Bank being the Goldman Sachs of Europe, which we've always been very negative about, finally are coming to an end.
That was Algebris Investments founder and CEO Davide Serra. And of course, just to clarify, it was Deutsche Bank shares recovering since the DOJ's demand for $14 billion. All
right, coming up, what you need to know to gear up for next week. This is Bloomberg.
Coming up, tech names including Apple on Tuesday, Alphabet, Amazon, and Twitter on Thursday.
And don't miss this either. Fed officials will be speaking on Monday. We've got New York Fed President Bill Dudley, St. Louis President James Bullard, and Chicago President Charles Evans.
And Apple also holding a media event called Hello Again on Thursday.
And I'm also going to be looking forward to, of course, U.S. GDP. That's on Friday. Big one.
That does it for What You Missed. Thanks for watching, everyone.
We'll see you back here next week. Have a great evening. This is Bloomberg.
I'm Donnie Deutsch.
And I'm John Heilman. With all due respect to Donald Trump, Hillary Clinton, Gary Johnson, Evan McMullen, and Jill Stein, I think we found our winner.
Mr. President, do you think the Cubs will win?
I feel very confident. I think Kershaw is a great pitcher, but they got too many sticks. They got too many sticks.
Oh, yeah, they've got too many sticks, all right. We've got a couple big sticks here, including Donnie Deutsch in New York City. After today, folks, there are only 2 Fridays left before the finale of this presidential contest. And yet again, Republicans are going into the weekend beat up, bruised, and more convinced than ever that this race, at the presidential level at least, is essentially over. Since Donald Trump self-sabotaged his final debate performance by refusing to say that he would accept the outcome of the election, the Republican nominee's attempt to clean up his mess only made it worse. And then last night, Trump made history in Gotham City as the first presidential candidate ever to get booed at the quadrennial Al Smith Catholic Charity Dinner. Today, at a rally in North Carolina, Trump was still in a fighting mood. He took a rare swipe at Hillary Clinton's most beloved surrogate, First Lady Michelle Obama, and that is a no-no. But he also said he'll be happy with the way he ran his campaign, win or lose.
I don't know what kind of shape I'm in, but I'll be happy, and at least I will have known. Win, lose, or draw, and I'm almost sure if the people come out, we're going to win. But I will be happy with myself.
Well, Donald Trump singing that old Frank Sinatra tune, I did it my way, but his prospects seem to be getting more dire by the day. A new Georgia poll by the Atlanta Journal-Constitution shows him with a narrow lead in that red state, 44 to 42%. That is effectively a statistical tie. And the former Republican chairman, Michael Steele, is now reportedly saying he will not vote for his party's nominee and adding a bunch of really harsh language about Trump in that. Donnie, my question for you is, given the way that Trump has acted over the past couple days and the growing sense of doom within his party, what should Republicans do over the course of these last 18 days before the election?
Other than cry. By the way, I have to quote Chuck Todd about the Al Smith dinner. Trump is the first guy to ever lose the Al Smith dinner, which is an unlosable charity event. I mean, stunning. Here's the conundrum for the Republicans. I actually think they only have one play here. Obviously, if you're Kelly Ayotte or you're Pat Toomey or you're the RNC, you're trying to get those swing voters, those moderate voters, those independent voters. Let's take 3 facts. Number 1. A avid Trump supporter is an avid Trump supporter. Number 2, an avid Hillary hater is a lot of people, particularly some people are actually going to be voting for Hillary Clinton, and that's the play. You take an overall stance. It's basically, look, we need to protect the fort. Let's stop Hillary Clinton one way or the other. This way you don't disenfranchise the Trump zealots that you're going to need them. They can't drift off. They've got to come to the polls. And it's a way to get some of those people that are actually going to vote for Hillary so begrudgingly. Even some of those 69% of people that do not like her are going to vote for her or theoretically can't get elected. Give them permission to say, no, we're going to stop her, but we're going to stop her in a different way. Somehow get that message out. It keeps the actual candidates clean and gets the message out.
Well, Donnie, I think there's one way to get that message out, and we're starting to see it already. Up in New Hampshire, the Chamber of Commerce, which has a lot of money and wants to protect the Republican Senate majority, has got an ad that they're putting up, the first one of the cycle, that is very explicitly saying, elect Kelly Ayotte in New Hampshire in order to keep a balance on Hillary Clinton as president. Now, it doesn't go out and say we're giving up on the presidency, and it doesn't say that we're accepting in any explicit way that Hillary Clinton's going to win. But I think that's the first of what's going to be probably, if not an avalanche, at least a pretty substantial number of ads like that ad, where outside groups who are basically acknowledging that Clinton is probably going to win are now going to try to desperately to keep hold of that Senate majority by making that argument explicitly, by basically saying, you know what, this is the last best hope we have to stop the Clinton agenda. Let's just focus down ballot and vote explicitly as a countercheck to her. Forget about Donald Trump. Don't talk about him. If not, don't repudiate him, but also don't talk about him.
It makes so much sense because the polls are showing us so many people who are voting for Hillary. They're not voting for her. They're voting against Trump. Give those people permission to put her in a box. And I think that's going to be a very, very, very sound strategy. I know a lot of people personally that would play along with that game. Okay, the Associated Press is now reporting that Hillary Clinton's campaign is preparing for a scenario in which Donald Trump refuses to concede the presidential election if he loses next month. I should say when he loses next month. That scenario, of course, would complicate a crucial transition period for the campaign, as well as for the country that has been bitterly divided over this election. Big John, with increasing speculation that Trump might challenge the integrity of this election, what happens next if he refuses to acknowledge a Clinton victory?
Well, I think a huge amount hinges, Donnie, on how close the outcome is. If Hillary Clinton wins by a lot, it'll be very hard for Donald Trump to not concede. If Hillary Clinton only wins by a little, or only wins by a little in a number of states, you could imagine this scenario in which Donald Trump, as he has suggested over the course of the last week, decides not to concede for a period of time, or maybe ever. It's smart for the Clinton campaign to be thinking about that. It's smart for them to be thinking about what the message is they would want to put out in that circumstance. But I will say this. If that is the way Donald Trump goes, and I'm not talking about recounts or a super razor-close election, but if Donald Trump refuses to concede and it's clear that she's won, he will go down in history even more ignominiously than he may already be slated to do as someone who really does not respect American democracy.
I think he's going to go down in history next to Joe McCarthy as one of the true nefarious characters in American history. You know who's stealing the election? Donald Trump. And he's stealing it from us. The other night I was watching TV with my daughter and Trump was on talking about rigged elections, and I kind of changed the subject because I didn't want her first introduction at age 12 to be about can elections be rigged? 45% of Republicans actually think that's the case. That's the scorched earth he's going to leave behind. He is Donald the Destroyer. What he said early on is exactly true. I, Donald Trump, are going to be happy after this, whatever happens, but I'm going to leave these turds in my wake. One of them being half of the country right now not believing that our elections, our fundamental bedrock of our democracy, are real and believable. It's disgusting. It's reprehensible. And we kind of talk about this dispassionately at this point. Who does he think he is? Just go away. You're vile.
Look, my hope is that if Hillary Clinton wins by a decisive margin, that Donald Trump will, for maybe the first time in this campaign, realize that he has responsibilities that are not just to himself and his followers, and those are real responsibilities to yourself and your followers, but also has responsibilities to the system, has responsibilities to the country. I don't know if he'll find that his way there, but I hope for all of our sakes that he does if that circumstance arises. All right, it is time now for our daily WikiLeaks update. The group put out a tweet last night that seemed to suggest that there may be a surprise in store for Democratic vice presidential candidate Tim Kaine and DNC interim chair Donna Brazile. So far, that threat has been a damp squib. But there were other new emails that are getting some notice today. One was from longtime Clinton aide Huma Abedin, who allegedly suggested that Hillary Clinton solicited a $12 million commitment to her foundation from the King of Morocco in exchange for hosting a 2015 foundation meeting in the country. Another message appears to be from longtime Clinton aide Doug Band, who purportedly complained about Bill Clinton not having to sign a conflict of interest document at the Clinton Foundation, even though he is paid by foundation sponsors and, quote, gets many expensive gifts from them, some that are at home, etc., end quote. The Clinton campaign has long cited federal officials who say the Russian government is behind this email hack. And David Sanger from the New York Times has a brand new piece out today that points out that if Hillary Clinton wins next month, She'll enter the White House with the most openly hostile relationship with Russia since the Cold War. Donnie, this seems like the big deal here to me. You know, we've been focused on the short-term electoral impact of WikiLeaks and the WikiLeaks hack. But my question for you is, the government is convinced that Russia's behind this. That's everyone across the board. I'm here in Washington talking to national security and intelligence officials. They all say Russia is behind this whole thing. Hillary Clinton believes it. She's trashing Putin. What are the implications long-term for U.S.-Russia relations if she becomes president?
Steve Schmidt gave it a very brilliant, impassioned speech about this is the first act of cyber war. We talk about it. We talk about what's in it as opposed to what's happening. And I actually think this is going to be a benefit for Hillary Clinton. The best way to get kind of constituencies together is a common enemy. And Mitt Romney was right. This is our big geopolitical enemy at this point. And I think Hillary Clinton's going to come out swinging. It's easy. When you have a face, we used to have Osama bin Laden. Now we have ISIS. There's no face there. There's a face on Vladimir Putin. And I think Hillary will come out swinging and use this and other things that are going on, the Ukraine, the short-term the short-range nuclear missile buildup, hostility towards other NATO nations. She's going to use this because there's a common enemy here, and that's the best way to get groups together. And I think this is actually going to play to her benefit.
One of the craziest things about this campaign is the way in which Donald Trump has cozied up to Vladimir Putin repeatedly and systematically over the course of the campaign, if for no other reason than the fact that Putin is really unpopular in America. He's not a popular figure. His approval rating's down below 10%. I think, look, you never want to start off in an unprecedentedly or a supremely hostile situation with one of the great powers in the world. But I do think that from Hillary Clinton's point of view, part of the reason why she's making these arguments about Putin now is not just to try to discredit the WikiLeaks thing, although she is doing that for sure. She also, I think, is trying to lay down a sense, she's kind of trying to cast Putin and make clear what he has tried to do in this election, which is to intervene in the American electoral process so that she has the political constituency behind her to do what she needs to do if she's the next president and has to deal with Russia. Okay, up next, things get nasty. We'll talk about the latest meme in presidential politics right after this.
Payroll contribution will go up, as will Donald's, assuming he can't figure out how to get out of it. But what we want to do is to replenish the Social Security Trust Fund.
Since that moment in Wednesday's debate, Donald Trump's nasty woman comment has taken on the quality of a meme, tapping into an intense and broad resonance, inspiring T-shirts and buttons, and catching on like wildfire on social media, particularly among women of all generations. And it's putting other Republicans on the spot now as well. Today on Fox News, a Republican congressman from Texas, Brian Babin, was asked about Trump's choice of words and defended his nominee, saying, quote, "Sometimes a lady needs to be told when she's being nasty." Okay. So with that, we are joined now by Stephanie Shriak, the president of Emily's List, which has a famous affiliation with women candidates around the country. Stephanie, Hillary Clinton in the debate did a couple things that can have resonance with women. One, she defended abortion rights in a very forthright way. She went after Donald Trump as a sexual predator. But this nasty meme seems to have caught on more than anything. Why do you think that is?
Well, I think we watched that debate and saw an incredibly strong leader in Hillary Clinton, and then right at the end, you heard this, and even for me, and I watch all of this, right? I'm a junkie of politics, and I even felt a little bit like it was a sucker punch at the end. And I think for so many women, for so many of us around the country, we've been in that room when some unqualified guy says something snarky or tries to belittle us right at the end, and it just, like, enough is enough. And I think that it's why it has caught the attention, and because it went to our gut, right? It was a gut hit, and we're seeing it all over. The energy of women of all ages, like you said, young women, older women, across the board, who are like, that's it. Hillary Clinton is the most qualified. We are proud to stand by her. She deserves to be president, and we're not going to take it anymore. And I think that's what you're seeing all over social media, and what you're going to see on Election Day, even in early vote, as we're seeing that around the country now.
Stephanie, it's Donnie. It's interesting. I felt that moment had even, I know the media has gone with the rigged elections, but I was stunned at that. And to me, there was such a misogynistic tone in that. What's interesting, I've always talked about how so much of this was going to be about gender. How did a man and a woman go at each other on stage? And Hillary, amazingly so, after being told she has hate in her heart and she needs to be locked up, we know all the things, she has never responded with belligerence, because I think they've done research and said a lot of men, we still live in this world, do not want to see a woman harshly respond to the man. So she was very disciplined. On the flip side, women certainly did not want to see that kind of harsh response, and I think that was certainly not in line with the sexual assaults, but on the same path of a basic dislike for women. But by the way, what she did at that moment wasn't even that nasty. It was just a little jab.
But it was like the jab that was heard around the country, right? It was just that instant. It was this, like, right in the gut. And like I said, even personally, and he said so many offensive things from the very first day he announced his candidacy. He said things that shocked me that day. But when I heard that at the debate, man, I knew it instantly that this was going to be a moment where 7 out of 10 women already dislike him. You know, this is someone who's bragged about sexual assault. We're already there, but this was like the extra bit of, like, how do I put it? We shifted into high gear, and now it's like, we got to get this done. We got to make sure that everybody gets out there, that we vote, that we talk to our sisters and our brothers and our husbands and our entire family and say, enough's enough. This is the time to end this. And I think that's that little bit for women, using that term nasty, and the way he did it, it really did catch, it caught fire. Ignited fire, maybe.
Yeah. Stephanie, I just want to clarify on behalf of my co-host. I believe what Donnie was saying when he's called something a little jab was what Hillary Clinton said about Donald Trump's taxes was a little jab, and that then Trump overreacted. Oh. Just so you're clear, I don't think Donnie was saying that what Trump said was a little jab.
What was, okay.
Yeah, just to defend Donnie. He gets in enough trouble on his own, but I like to try to help him out.
I love you. I feel the love over here, even though we're not together.
Here's my question for you, Stephanie. I think one of the things that's really powerful to me about this is the way in which it's resonant to me with times in which groups that are often discriminated against or treated poorly embrace terms of opprobrium that are used against them, right? So there was a period of time when gays and lesbians adopted the term queer in a kind of defiant way. When they heard homophobes calling them queer, they just sort of took it up as a badge of honor. That feels to me like what's happening here, especially among a lot of the younger women who've taken to this very quickly, that there's a kind of like, they're kind of like, you want to call me nasty? You're damn right I'm nasty.
You are seeing it all over social media. I mean, even at Emily's List, where we have a campaign that's going incredibly well called "Women Can Stop Trump," you saw the logo go out, and it was "Nasty Women Can Stop Trump." There is something about that. It's because when you hear it initially, and it's so painful that you have sort of two choices. You can sort of crumble underneath it, or you can stand up and be proud and prove that person wrong. And I think that's what we're seeing women across the country doing, is exactly that. We're going to stand up.
I think to that point, Stephanie, I think women are going to rise up. I think watching Trump, I think, and a lot of guys are saying this, and I'm saying this, maybe it's time for women to take over. You know, Merkel, Golda Meir, Thatcher, Indira Gandhi, hasn't gone so bad. And I just think it's been a male with the worst male behavior we've ever seen. And I think whatever the polls are showing by women, it's going to be, and then some. They have had it. And I think a lot of men are kind of saying, let's give the lady a chance. I think there's something underneath here happening.
Well, I'm glad to hear you say that, because it is way beyond time for us to finally crack through that glass ceiling. And we have in Hillary Clinton someone who stood on that debate stage with grace and with grit to just say, hey, I am prepared to do this. And really, I saw during that entire debate, forget about the last moments there, but that entire debate, almost an evolution, another step toward really becoming the leader of the free world. And I was just so inspired by her performance, and then her ability to sort of stand and smile and say, you can say whatever you're going to say, Donald Trump. We've all been around those Donald Trumps like that. It doesn't matter. The stakes are too high, and we're going to stay focused. And I think it's really an inspiration to women across the country as well.
All right, Stephanie Shriak, from my partner, Nasty Man, Donnie Deutsch, and from me, thank you for being on the show. Up next, we'll have some monkey business on the show. We'll talk to Survey Monkey pollster John Cohen when we come right back.
I want to say I miss John in the studio here because he defends me and I love him. With us now from Stanford, California is John Cohen, Senior Vice President of Survey Research at Survey Monkey. All right, John, let's first on the presidential level. We're going to go down ballot in a minute. We've been talking for months about a narrow electoral path for Donald Trump. How narrow is that path right now?
Well, it's extraordinarily narrow right now, and it's probably closed a lot in the last 6 weeks since all three presidential debates and the vice presidential debate, didn't help him nationally, and certainly is not helping him in the states. He's a very narrow path that goes through the Midwest, but Clinton's now contesting places that Trump shouldn't be defending, like Arizona and even Texas in our data.
Hey, so, John, Sean Howman here. I've been looking at your polling over the past month. I know you look at your polling all the time. We just finished these big three debates, right? And there are some people who think that they were masterful performances by Hillary Clinton. They really moved the needle in terms of actually how the election is being fought out on the ground. So the impact of the tapes that Donald Trump had to suffer from, the accusations. What's been the effect of these last basically 3 weeks on the polling of all the stuff that's happened?
Yeah, it's really collateral damage to the Trump campaign. What we've seen on the Democratic side is that Democrats and Democratic-leaning independents have become increasingly supportive of Clinton, just like you would expect in the closing weeks of a campaign. But that just hasn't happened on the Republican side. Republicans are staying at the level of support they've had for Donald Trump over the last 6 weeks. So, this is a really big missed opportunity for him, and in part because of the damage, that he's done to himself, by the tapes and the reaction to them.
John, let's move down ballot a little bit. Obviously, let's talk about a potential wave. What is the tipping point as far as a popular vote or as far as an electoral vote where it really starts to take its toll down ballot? Let's start with New Hampshire, for instance.
Yeah, well, New Hampshire, we actually have the Democrats ahead in both the Senate and the governor's races. And, we see that, and there are a lot of really closely contested ones from North Carolina to Arizona, surprisingly, for Senator McCain. So it's really close. And your last segment was about female voters. They really will tip the balance in all of these states. When you look at the gender gap across all of these states and nationally, it's as big as we've ever seen. And when you combine that with the education gap that there is in the country, you have white women with college degrees going, incredibly for Democratic candidates, which puts lots of southern states in play, not only for Clinton, but also for the Senate candidates. So the Democrats are in a good position, not as good as Clinton is in terms of winning the White House, but they do have a shot at taking over the Senate.
So, yeah, John, let me just drill into that a little bit further. I hear from Republican pollsters who are doing private polling for various candidates all the time that they're sort of freaking out right now, and that if Hillary Clinton were to get up to win the presidential election, if she got up, right now her polling average, she's up by about 6. If she got up to 8, 9, the Senate would be gone for sure for Republicans under those circumstances, and the House might be in jeopardy. What do you see in your numbers in terms of the likelihood of, what would you put the likelihood at right now of Democrats retaking the Senate and the House?
Well, in our national polling, we're right at that 6 number you mentioned. We have been as high as 9 and 10, and we've been as low as 1, but not for a very long time. Clinton's lead has been steady nationally. There are no signs that it's gone up over the course of the last month, despite all the damage to the Trump campaign that's been reported. She hasn't increased that lead dramatically, so it's kind of hard to believe what she could do at this point to increase it more to 9 or 10. So it's going to come down to some of the idiosyncrasies of these really close races, and again, hinge on turnout, and particularly among female voters.
John, I'm going to put you on the spot as somebody who's been following this. Give me the electoral number. Does she get near 400?
Oh, gosh. Right now, we have her pretty solidly above 270. So, kind of when we talk about how narrow his path is, it's extraordinarily narrow or non-existent if you look at the data today. She has a shot in the, the mid-300s, but I doubt she'll get to 400 unless, only millennials could vote.
All right, John, you're a scholar and a gentleman deserving of much praise. Coming up, we will show you the Ohio interview that Trump walked out of yesterday. But first, these words from our sponsors.
19 days out from the election, you've been labeled a racist, you've been called a sexist.
Thank you very much.
How do you respond to that?
I am the least racist person you've ever met.
That was Donald Trump speaking, or rather, not really speaking, to an NBC reporter in Delaware, Ohio yesterday. We are joined now in New York by Republican strategist and crisis communications consultant Susan Del Percio. And here in our nation's capital is Democratic strategist and former White House communications director, Anita Dunn. Anita, let me start with you. You're watching Donald Trump there, walking out of interviews. You've been a communications director and have guided many a candidate. What do you think that says when you see a candidate do that? It tells you what?
It tells you the candidate doesn't want to answer questions from reporters, which means the candidate doesn't feel things are going well, which generally means it's a campaign that is on the downward trend. So it's not a good thing when people start walking away from interviews with reporters. If they feel like they're in a good mood, they're not going to do that.
Susan, let me ask you this question. You've done a lot of crisis communications. I think in political terms, after the debate on Wednesday night when Donald Trump said he wouldn't necessarily abide by the election results, some people said that was a political crisis for him. The next day he went out and gave a speech in which he sort of doubled down on it, in some respects made it worse by saying he would abide by the election results if they went his way. So how do you think Donald Trump's handling this particular moment where a lot of people are sort of freaked out by what he said at the debate?
Well, he's handling it terribly. He really needs to stop with this nonsense. A lot of for example, he has at least moved from there's a national conspiracy with black helicopters and men in tinfoil hats, so that's good. But he's got to move off of these contested elections. Right now, in states like Florida and Ohio, there's an automatic recount if it's close. So he doesn't have to do all this nuance. He should get back on track, get on his message. That's the only time he has been really effective in the polls.
Susan, I want to stay with you as a crisis manager, not even a Republican strategist. Let's go past the election, assuming Donald loses. From where I sit, and this is what I did for a living, he's destroying his brand. And we're seeing it already. Hotels are down 30, 40%. People are canceling golf trips. I mean, we know the reasons why. So if he brought you in at this point, post-election, and says, okay, I got to go back to being Donald. How do I get this stuff away? How does he do it, and can he do that?
Well, I think the biggest thing that he's going to have to do to restore his brand is handle election night with some dignity and some grace. That could be the beginning of the rehab, if you will. I think he's hearing a lot from his children that, Dad, we've got to get this back on track. We've got to go, we're hurting right now. But that's where I would start.
Anita, I actually agree with Susan. I think he's going to do is he set up a surprise, because I think he's smart enough to know he needs a reboot. And I actually do think he's going to, believe it or not, be gracious on election night and go from there. Let's say he does, and let's say the mantle is handed to Hillary at that point on a non-conspiracy level, on a typical, peaceful passage of power. What would be her first key things in her first 100 days during the transition?
Well, I think for Hillary Clinton, if she's elected president, a key thing for her will be to very early on in her transition reach out to Republicans, reach out to independents, and demonstrate, show, not tell, that she's very serious about trying to bring everyone together.
Give me, for instance, because obviously she's got to reach across to that's 101. Give me a specific thing that she could do, a tactic that would kind of all of a sudden go, wow, maybe this is going to be a little different than we thought.
Well, I'll give you two tactics that she could do potentially. One of them is that she could sit down with Donald Trump very early. She said to him last night that, I'm going to need, we're all going to have to work together. She could actually call Donald Trump, sit down with him, talk to him. That would be, I think, a dramatic thing. The second thing she could do, though, is she could actually go to Capitol Hill and meet with the leadership of both parties, go up there, not make them come to her. And that would also be, I think, a strong signal.
Susan, I want to talk to somebody who would be a colleague of yours, Kellyanne Conway. She looks really tired. I think she's great, but she's got an unwinnable job. What would you say if you were managing her career now? Because she's in an interesting juncture. I mean, she's got a brand, and she can go down with the ship also. Obviously, she's not going to abandon him. What would you tell her to do over the next 18 days?
She doesn't have to do anything. Kellyanne's brand is solid as can be. Yes, she went to work for a difficult candidate, but she has maintained very good relationships. And actually, the fact that she has gone on the networks so much, and she's been on MSNBC, CNN, Fox, that has shown that she is willing to, always stay in touch. So I don't think she has anything to worry about.
All right, I agree. I think she's great, by the way. Hey, guys, I really appreciate it.
Thank
Good
you.
stuff, all right? Up next, Sir Eddie Glaude, our former friend, our good friend, not our former friend, he's our current friend from Princeton. And if you're watching us in Washington, D.C., you can now listen to us on the radio, Bloomberg 99.1. We will be right back.
whose vision for our country is completely and utterly lacking in hope. A candidate who tells us that our country is desperate and weak. Barack and I, and our friend Hillary, we have a very different perspective on this country. One that has everything to do with where we come from and how we were raised. He just doesn't understand us. Maybe that's why he calls communities like the one where I was raised hell.
His closing argument asks, what do you have to lose? Well, I'm here to tell you everything. Civility is on the ballot. Tolerance is on the ballot. Justice is on the ballot. Equality is on the ballot. Our democracy is on the ballot.
That was, of course, President Obama and First Lady Michelle Obama out on the campaign trail for Hillary Clinton this week. Joining us now from New Jersey, Dr. Eddie Glaude. He is the professor of religion and African-American studies at Princeton University and chair of the Center for African-American Studies. Eddie, good to see you not so early in the morning and finally at a respectable time.
Indeed.
You know, that is, I don't care what your politics are, that is an incredible couple. And we know, obviously, President Obama's approval rating in the low to mid-50s. I think if they took Michelle Obama's approval rating, it would be in the mid-70s. Question, are they enough together? And it's very personal for them. And we've never seen a president or a first lady out on a campaign travel as incumbents as they've been for an incoming potential president. Are they enough to galvanize as much of an African-American turnout as we need? And even a tougher question, if you had to send one out, who would you send out at this point?
Well, I would probably, the second question is the easier question. I would probably send out Michelle Obama.
She's always been beloved in black communities across the country for a variety of reasons. And she seems, of the two, to be really effective on the campaign trail. As to the first question, Donnie, I think it's certainly not enough, but it won't hurt. The fact that you have the president with his favorability and Michelle Obama with her effectiveness on the campaign trail making the case in the context of Donald Trump engaging in all sorts of racial dog whistles in terms of voter fraud. You know, check out Philadelphia, check out Chicago, check out St. Louis. Those are claims or dog whistles or foghorns, as you might say, to say, look at these black and brown people who are going to steal the election. And so to have them out on the campaign trail offering the counter argument, indicting and condemning Donald Trump can't help but be effective. But again, I think Secretary Clinton is going to have to do even more to get us excited, or to keep us excited, to keep the enthusiasm up.
Eddie, I want you to take me onto the campus as a professor. Obviously, you're dealing with hundreds and hundreds of millennials, black, white, every color. And I've been shocked at their apathy and their lack of appetite for Hillary Clinton. I understand she's their parents' candidate, but as far as free tuition and as far as her take on climate, I mean, this is in the wheelhouse for anybody in that millennial age bracket, and they're just not biting.
Yeah, I think there's a matter of trust. Many of them were supporters of Bernie Sanders, and many of them heard her counter argument to his initial recommendation around these issues. Remember, she said that they weren't doable, that these issues weren't practical, that Bernie Sanders was in effect naive, and so there's a sense in which they don't believe she's coming to these issues with full faith. And I think there's also a deep skepticism, Donnie, about the current two-party system. Young millennials are active. They're making, I think, rational choices, and I think they are generally dissatisfied with the current political climate, and they're trying to figure out how to act politically. But there's a new study out, Gen Forward, at the University of Chicago, particularly breaking down millennials of color, and what they see in the data is that although there's skepticism, black millennials are breaking towards Hillary Clinton. And her campaign should be at least excited about that. But it's still kind of couched in a general skepticism about whether or not she's really committed to these issues, right? So they know that if she gets in office, they're questioning whether when she gets in office, will she even pursue these issues?
Eddie, I want to ask you a question just in a broad sense. Sure. We've now finished these three debates, right? All of them massively rated, 80-some million in the first one, 60-some million in the second one, 70 million in the third one. There was a discussion in the first debate that Lester Holt led about criminal justice issues and a little bit about race. Beyond that, I don't think the topics was broached for the rest of the debate. So if you're an African-American man or woman, any age, watching those three debates in America, your takeaway is what?
Well, it's not only invisibility, but disposability, John. And what made the second debate, what made the silence in the second debate more egregious was that they were at Washington University in St. Louis, just 15 minutes down the street from Ferguson. And Hillary Clinton didn't even broach the subject, and she could have, particularly when the question came about or was asked, could Donald Trump govern all of America? And so part of what we have seen, and I've said this before, is that there's a kind of confusion on the part of the Clinton campaign. On the one hand, they seek to activate the Obama coalition. They want to kind of take those constituencies, get them excited, motivated to go out and win. But on the other hand, they want to activate the coalition that elected Bill Clinton. And that coalition that strategy, it seems to me, was predicated upon triangulation, right? And that involved, in some ways, kind of taking black voters for granted. And so it seems to me that confusion is evidenced, or has been evidenced over the course of this campaign, and has been evidenced throughout the debates as well. And so as an African-American voter, I must admit, I was pretty upset as I was watching.
Yeah, I had a feeling you might be, just knowing you a little bit. So let me take that answer to that question and now loop it back to the first answer you gave to Donnie, right? So if I were running for president, I was a Democrat, and I had Michelle Obama and Barack Obama on my side, I would have them out there every day I could, given their popularity and their skills as performers. But if I were an African-American voter in a swing state or in a battleground state, and I felt like that the job of getting me excited was being outsourced by the Clinton campaign to the black president and the black first lady, I might think that was a little condescending. Am I wrong to think that that's a little condescending, or that you might feel that way if you were African American?
Well, some may feel that way, John. I think more than anything, I think African American voters want to confront candidates who are seriously thinking about issues that are confronting their communities. And so you can send surrogate after surrogate. If it was, it could be Barack Obama, it could be Michelle Obama, it could be Bernie Sanders, right? It could even be Usher or Chris Brown or Beyonce. Well, Beyonce might be kind of exciting. But, you can send these surrogates out, right? You can send these surrogates out. But at the end of the day, I think African Americans want to hear what? They want to hear policies they want to hear policy platforms around employment. They want to hear how you're going to substantively address criminal justice. They want to hear how you're going to address housing, the housing crisis in our communities. Right. And it's not enough to send us to the white papers that you've written. You have to lay out the policies in detail so that then we can then engage you. Right? And so the urban policy that we've heard from the Clinton campaign, for example, I have a lot of questions. Are we going to rely on enterprise zones again? We've been relying on that for a long time. Is that sufficient? Right? So we need to, I think at the end of the day, we need to start treating African American voters as substantive, thoughtful, rational actors and not apolitical creatures. Obama and the Obamas are going to do a great job. But again, going back to Donnie's question, they're not sufficient. We need more.
Eddie Glaude, I love listening to you. One of the smartest guys around. Appreciate it, buddy. Up next, money, money, and more money. We will break down the latest campaign fundraising hauls right after this.
Further deepening the sense of foreboding within the Republican Party these days are some new fundraising numbers out just now that show Democrats are outraising Republicans in every way on every level, from what was raised to what was spent to cash on hand. Hillary Clinton is outpacing Donald Trump. Democrats are outpacing Republicans. Here with us to talk more about this and other topics of interest is Matea Gold of the Washington Post. Matea, great to have you here today. We're just showing a bunch of stuff on our wall there that illustrates the point that I was just making, which is Democrats seem to be ahead in most important respects. Am I right to think that that's something that if I were a Republican right now looking at everything else that's going on in the world, that would be just another cause for deep concern?
Yeah, I mean, you could call it the icing on the cake or also just sort of a symptom of the larger problem, right? I mean, one of the things that is happening now is that Hillary Clinton and the Democratic Party had twice as much money on hand as Republicans and Donald Trump heading into this last final month before Election Day. By any way you measure it, that is not helpful. And if you look at actually how they're spending their money, you also see that the Democrats have a huge advantage, especially on the ground and in the air. So Hillary Clinton's campaign spent $66 million last month just on ads. That was 3 times as much as Donald Trump. She has 815 paid staff. He had 168. So the numbers really show the huge difference in the infrastructure.
Right. So, Mateo, let me ask you the obvious sort of question, right? I mean, Donald Trump has had a horrific 3 weeks, just horrific by any historical standards in terms of the stories he's been dealing with, the controversies he's been immersed in, how he's handled them, all of that stuff. And Hillary Clinton's massively outspending him. And yet, although she has a demonstrable lead nationally, about 6 points according to the polling averages, and she's pulling ahead in a lot of battleground states, it's not a runaway yet, right? We just had on the director of SurveyMonkey who said he doesn't see a landslide in the offing. So why is that?
Well, I mean, it's clear, we've seen this dynamic since the beginning of this election cycle, that this is an incredibly polarized electorate. And there were people that made up their mind very early on about both these candidates, and they just are not going to be budged. And really, this election is coming down to fighting over those last little slices of the demographic that still, for whatever reason, haven't made up their mind. But, you know, I do think we saw more volatility post-Labor Day than we typically do. And that's in part, I think pollsters have said, because there's also not great affinity for these candidates. So while there's a lot of animus on both sides, people have doubts about their own candidate they're supporting, and so they're able to be swayed. But we're seeing it just going back and forth enough just at the margins, not the huge sweep in one direction or another.
Hey, Mateo, it's Donnie. I want to do a wiki pivot and do our daily wiki update, and I guess that's the point, that every day something drips out. Today it's about interacting with the King of Morocco and a $12 million donation. One of the reasons, clearly, none of this is getting traction is because Donald steals it every day by doing something over the top. Even if Donald was behaving like a normal candidate, it doesn't feel like any of this stuff is sticking.
Well, I mean, we have spent quite a bit of time looking through the emails that are being released, and we have to put into context that, you know, taken alone, some of these emails seem dramatic or alarming, and it's important to do some reporting around them and really understand what they say and what they signify about the way Clinton has operated in her campaign, and also how the foundation operated. And so far, we have not seen this kind of dramatic bombshell that WikiLeaks and others have promised. I do think we're seeing a lot of fascinating insights into how she managed her campaign, approached this race. I mean, really interesting nuances when you get behind the scenes and try to have a better understanding of the political calculations they've been making. But if anything, these revelations have sort of reinforced perceptions of the way she approached a lot of the issues this year. I don't think they've really delivered any huge surprises.
That's it. It's inside baseball. It's interesting. The reason the emails stick is because the average person would go, oh, she erased 33,000 emails. She must be up to no good. The average voter hears this stuff, and there's just not a headline there. There's not a soundbite there. There's not something to get their arms around. What would be an extreme situation? What would be that soundbite? The kind of thing that a Republican would be drooling to see in an email.
I mean, at this point, it's very hard to just speculate about hypotheticals about what would be in there and what would actually garner headlines. I mean, I don't think it's helpful for her to have this constant press of stories about the political calculations that her strategists were making in trying to figure out how to make decisions on TPP, for example. And that doesn't help her with her labor allies. It doesn't help her with the business community. So there's no question this is not helpful. But, you know, I don't think we have any indication we're going to see any wrongdoing in these emails. And a lot of it is just sort of filling in the gaps of a story that we've seen play out over the last almost 2 years now.
Mateo, I want to bring our conversation to an end in this last minute we have together with the way that everybody wants to end a Friday afternoon, which is talking about journalistic self-investigation, the sense of things that we journalists like to think about in the dark nights of our soul. You cover this WikiLeaks thing, and it's complicated, this story, because you're dealing with stolen goods here, basically, right? And so there's questions about how you verify that these emails that have been leaked are real. But there's also the question that's been posed by a lot of people. Is it okay for us to be covering, property that's really been stolen, presumably by Russia, handed to WikiLeaks, and now put out to try to intervene in an American election in an unprecedented way? So how do you guys grapple with that at the Post, and you yourself personally?
Yeah, so we obviously take that issue really seriously. I think our view is this material is out there. It's being interpreted by people who actually don't have a lot of knowledge of the reporting or nuances of these issues. I think we actually can help serve our readers by bringing some context and reporting around some of these emails and provide a fuller picture of what was actually happening.
Yeah, I know you guys are handling this responsibly, and I didn't mean to suggest that at all. I just want to be clear. Thank you, Mattia. That's a very thoughtful answer. Really great to have you on the show, and we will be right back.
Head to BloombergPolitics.com for all your election coverage needs. Up next on Bloomberg Television, a look inside the gaming industry with CEO of Unity Technologies, for John, for myself, for Mark, who's on assignment. Sayonara. Drive safely.
You're watching Bloomberg Technology. Let's begin with a check of first word news. The United Nations top human rights official is calling for an investigation into what he says are war crimes being committed in eastern Aleppo. Airstrikes by the Assad government and its allies are blamed for most civilian casualties in the Syrian city. Meantime, security issues prompted the UN to cancel plans to begin medical evacuations. Philippine President Rodrigo Duterte says his remarks about separating from the U.S. don't mean severing ties. Clarifying comments made in Beijing, President Duterte said, quote, separation from the U.S. refers to foreign policy that doesn't dovetail with America. Hillary Clinton has a slim lead over Donald Trump in the battleground state of Florida. 49% of likely voters support Clinton compared to 45% for Trump. That's according to an Opinion Savvy poll. Libertarian Gary Johnson gets about 3%. The Green Party's Jill Stein, nearly 2%. 3 of 8 election swing states, Ohio, North Carolina, and Michigan, saw their unemployment rates rise in September. Nevada and New Hampshire saw declines. The jobless numbers were unchanged in Florida, Iowa, and Pennsylvania. The figures show hiring is slow from last year's healthy pace. Global news 24 hours a day, powered by more than 2,600 journalists around the world. I'm Mark Crumpton. Bloomberg Technology is next.
I'm Corey Johnson, in for Emily Chang, and this is Bloomberg Technology. Well, coming up, AT&T pushes to clinch a deal for Time Warner by Monday, trying to front-run other bidders. We're going to explain why the telecom giant is in such a rush. Plus, another deal we're watching, Qualcomm's blockbuster $40 billion takeover NXP, could also come next week. We're going to see if the deal makes sense for both sides and the market for consumer drones aiming for the skies. We're going to hear from China's consumer drone giant DJI up ahead. But first, handful of possible deals on the radar this Friday. First up, Qualcomm and NXP, the two chip makers, wrapping up what could be the largest transaction in the history of the semiconductor industry. It's a mega cap deal that would cap a wave of consolidation in that sector. We're also watching takeover talk between AT&T and Time Warner. People familiar with the matter tell us that the carrier is pushing to seal this deal by Monday. And finally, an enterprise software company said to be valued at over $10 billion. We're going to talk about Infor in just a moment. But first, let's kick this off with Qualcomm NXP. Bloomberg's Brooke Sutherland writes about M&A for Gadfly. It's our instant commentary section of the Bloomberg. She's in New York with the latest. This is an amazing deal here, a big change for AT&T. What do you think they see in this, Brooke?
Well, you know, I think the industry in general has been moving toward this sort of combination of distribution and content. We saw Comcast as sort of the first mover with its deal for NBC Universal and then later for DreamWorks. And I think AT&T is just sort of following in its footsteps there. And this is where the industry in general is moving right now.
It is interesting. I mean, we also, of course, had the Verizon results this week, and Verizon with AOL and their maybe acquisition of Yahoo, likely acquisition of Yahoo, I'll call it. Is this about a slowdown in growth in wireless and looking for other venues, or is it something that's going to integrate in a certain way?
You know, I think it's a little bit of both. I think that, you know, what we've seen is that people are willing to pay for content, even if they're not willing to pay for cable. You know, HBO Go has gotten good traction. People pay for Netflix. So content is really key, and it's important for reaching out to that wire-cutting generation that maybe doesn't want to pay their cable bill every month.
And then, of course, you know, we've got these mergers happening in the media telecom space. But then this semiconductor business is really amazing. We've seen so much activity in this sector. But NXP, Qualcomm, very different businesses, it seems to me.
It is, and I mean, that's sort of the point, is that Qualcomm's really looking to diversify here. They want to move away from the smartphone market where shipments are stalling. They're facing a lot more competition as handset makers are bringing a lot of this production in-house. And so NXP is much more diverse. They're really a big player in the automotive market, which is seen as a growth area going forward for semiconductor makers. And so the idea is to diversify. You know, the question is whether it's too much diversification and if Qualcomm's going to get in over its head here. I mean, it's going to be a massive integration effort of a company that's already in the process of integrating a deal. I remember we haven't even passed the one-year anniversary of NXP's acquisition of Freescale, and that was almost a $17 billion deal. So, I mean, this is going to be a very, very big undertaking for Qualcomm.
Well, and indeed, that's what really got them in substantially into the automotive business, which, you know, is still a payment business, still an important thing for them. And finally, let's get to Infor. I said we mentioned this. What is Infor?
It's a software company. I mean, the most interesting thing about this deal is the size of it, which you mentioned, you know, sort of in your intro, over $10 billion. We haven't seen very many private equity deals of this size since the financial crisis. They've just been very difficult to get done with the financing environment, and, you know, companies have sort of moved away from the club deals that were the hallmark of 2008, and something this big is very difficult to do just for one private equity firm. So I thought it was very interesting in the Bloomberg story to see that the companies are actually talking about maybe doing a club deal again, which is going to be a very interesting phenomenon if we start seeing those coming back.
There's a lot of deep pockets looking to do deals, so I would imagine it's probably possible. Bloomberg News deals reporter Brooke Sutherland. Thank you very much. All right, well, hackers temporarily shut down access to a lot of websites across the internet around the world on Friday, primarily in the U.S. The issue appears to be with domain name service hosts, in particular a company called Dyn. Dyn reported the first attack around 7 a.m. New York time this morning, left millions of people without access to Twitter. Good Lord. Imagine no access to Twitter and Spotify and the New York Times, among other sites. Well, two other waves of attacks followed later in the day. Joining us now to discuss what happened and why, Brian White, COO of Red Owl Analytics. Always good to see you. So what happened here?
Yeah, there was a massive distributed denial of service attack, and it targeted against the DNS, which Dyn hosted. And so essentially, what's happening, you know, to put this into layman's terms, is somebody went after the post office, and the post office didn't know where to send packages, and that's what essentially happened here. And why this is concerning is it went at the fundamental infrastructure, which connects people to sites like Twitter and Spotify, etc.
And so, why would someone possibly want to do this? Like, what could the motivation be? I mean, you know, the phishing attacks and all that stuff, I get that. Shutting down lots of websites, is this some crazy kid in an Estonian basement somewhere? Or?
Yeah, first, let's segment what happened, right? They took advantage. They used a botnet. So they took many computers together, and what they're taking advantage of increasingly are all the internet-connected devices. These are our webcams. These are all the internet-connected devices we have. And so they have unprecedented scale to start to launch these types of attacks. The second, in terms of why they may do it, that's unknown. There's a couple of different ideas out there, and I think there are two that are worth mentioning. One...
I hope these are the weird ones.
No, one is weird. The one first is that there is some research that was done and released yesterday, and they thought maybe this may be retaliation. The problem with that is it's hard to launch this sophisticated of an effort that quickly.
And what was the research about?
It was about the proliferation of these types of attacks, what else needs to be done, and making people aware of the issue. And, you know, there's Brian Krebs, who, as we know, is a well-known cyber journalist, was impacted by these when he published some of this research about 2 weeks ago. And then the second idea, which I think is probably the more concerning, and you'll appreciate it, is are people now probing the fundamental layer of the infrastructure? And they're thinking about, you know, what is really interconnected, and how, if I target Dyn, what else can I do? And are they probing our systems to really understand just how interconnected we are?
Because that could be a state-backed hack, so they want to sort of see how the internet works so they can try to attack it in a time of war.
Yeah, because it's difficult to know. Like, we didn't know until today that Twitter and Spotify gave all their business to Dyn. That we've disclosed today. Some may know that. There's only a few of them that do that type of service, but now they know that, so they gain some insight. I don't know if that's really real, but if you want a conspiracy theory, that's as close as I'll go with you.
You know I want a conspiracy theory. You know me well. These kinds of state-sponsored attacks start to get interesting, and there's some history here of a couple of countries, Russia, North Korea, China, the U.S., Israel, right? All countries that have used cyber attacks to achieve certain goals at certain times of conflict.
Exactly. And I think what we're seeing now, and particularly in the election season, obviously Russia is front and center. Who would have imagined that we'd have this much coverage about what Russia is doing and, you know, their potential relationship with WikiLeaks and the disclosure of the emails. But the reality is that there's quite a bit of capability out there, and we don't know exactly what everybody is doing. And the reality also is that we need more redundancy in the capability. And so I think inevitably you're going to ask, what else needs to be done to avoid these problems going forward? And I think it's a combination, as usual, of many things. It's more redundancy, it's more testing, it's probably better technology, and it's more communication to ensure that we know when something like this happens, we can quickly get back up and running. And I think that was the concern this morning.
It's also interesting to see the businesses affected. I talked to one entrepreneur this morning who told me her business, which runs online, was completely knocked out. It's a startup. It's because they're such a young business, they don't have the redundancy that larger businesses you would think would have, but apparently Spotify and Twitter didn't have that either. Could this lead to businesses, which are substantially internet businesses, having sort of dual publishing methodology or dual capabilities on the internet so that they are not so dependent on any one vulnerable source?
No, I think what they may do is they may go to more and more providers like Dyn to give them, more redundancy, which many of them do already. But, this is the path that we're already in. We're so reliant on this. I mean, GitHub was also impacted. And, we use GitHub, as many software companies do. So a lot of people were impacted by this that you wouldn't normally think about. And that's not going to change the way that we develop software, the way that we interact, the way that people shop. They're all reliant on this system.
Interesting stuff. All right, Brian White, good to see you. Thank you. Appreciate it. Brian White, COO of Red Owl Analytics. Well, coming up, Nintendo announcing the launch of its latest gaming console. We're talking to one of the developers working with the gaming giant on what we can look forward to next. And later, we're going to look to the skies. The world's largest maker of consumer drones, DJI. We're talking about their Mavic Pro, a new competition for GoPro and others, and their research plans in Silicon Valley. This is Bloomberg.
In San Francisco,
One stock we're watching, Microsoft. Shares soaring to a record high on Friday, finally getting past the number set in 1999. The software giant reportedly a reasonably strong first quarter sales and earnings, fiscal first quarter, particularly in their cloud business. Shares surging 5.6%, breezing past the price hit right at the height of the dot-com bubble back in 99. A rally spurred on by enthusiasm, particularly for its Azure cloud business. Well, Nintendo is switching things up, trying to regain a foothold in the gaming console market. The company unveiled its long-awaited device, the Nintendo Switch. It'll let gamers play at home and on the go. The gaming giant reaching out to third-party developers to bolster its game offerings. One of those developers, Unity Technologies, a San Francisco-based game development platform, creates software for some of the top games, including blockbuster hit Pokemon Go. But will this be enough to help Nintendo and others? Let's talk about Unity with Unity's CEO, John Riccitiello. John, great to see you.
Great to see you.
Describe what Unity does first, if you would.
So Unity does a couple things, but at its core, we build a set of technologies that make it super easy to build games, whether those games be for PlayStations or Xboxes, Nintendo platforms, or for iOS or Android, Apple and Google platforms. So think of it this way. If you were going to try to build a game for all of those different platforms, it might take you 50 people to build one, and then 40, then 30, 30, 30, 30.
Which all the big game houses are doing. Activision, Electronic Arts, they've got all these different teams that try to write the same game for different platforms.
Right, that's what they've been doing historically. And if you write it in Unity, first off, there's so much that's there in our code base that instead of those 50 people for the first application, you could probably build it with 20. So you can do it cheaper, better, faster. And the second thing we enable you to do is essentially hit a button, hit return, and you capture all the platforms. Write once, deploy to all the platforms. So we're a content enabler. We think of ourselves as super advanced paintbrushes for content builders. You make better stuff faster and cheaper with Unity.
There was once hope for object-oriented programming, right, where you just essentially have a bunch of complete blocks of programming and just kind of stack them together and have your program written already. Is that part of the notion here?
Well, that's a metaphor, but I'm not sure it's the perfect metaphor for what we're doing. I would say if you're looking for a metaphor, instead of writing a game,
I usually am.
If you're trying to write a game, you're going to pick a programming language appropriate for the platform, and so you're going to start basically with a lot of letters and text and syntax. It looks like programming. In the case of Unity, you basically draw the game. You draw the car, you draw the racetrack, and then you use scripting to sort of connect the car to the racetrack. And because you've built the game as opposed to written the game, we can compile the code on any of these platforms. So you basically create once, deploy to all the platforms. Saves time, money, and energy for developers, which is why, by way of example, in the month of September, 9 of the top 20 games on mobile were built in Unity, or why over half the games in the world today are built in third-party engines like this, and why about a third of the games built in the world, a third of all games built in the world are built in Unity, or why about 70% of all AR and VR today is built in Unity. It's better, faster, cheaper to get there.
I want to kind of run through what's going on in the world of gaming right now. Now, you mentioned, or I mentioned Nintendo just briefly. They've got this new gaming device, right back to their original roots of sort of the handheld gaming. Your take?
Well, I mean, first off, if you take a look at Nintendo, and this is why we live. We live to enable content creators like Nintendo. And Nintendo's created some of the most incredible intellectual property in history.
Right.
And, one of the things we're proud to have helped power is the Pokemon Go franchise that Niantic realized recently and launched, built on Unity, super successful. And at the recent Apple event, they announced Mario. And to be honest with you, I think the world's been waiting for this. It's going to be a gigantic hit. In terms of their new Switch platform, of course, I've seen it. I've seen the releases. We are working with them. I'm sort of in an NDA situation to say more than I actually know about it because we are partners to Nintendo. So this is one of the things I tell you. Nintendo surprises you every time. They're innovative, they're different, and at times when they nail something, they hit the ball out of the park, and that's what I'm hoping for.
So Sony VR is out. Oculus has gotten maybe more attention than Sony VR, but it looks to me like Sony VR is in a much better position because they've got so many machines out there. What do you see happening on the content side in terms of development? Is anyone starting to do really big games? Big games, I mean immersive games that take hours and hours to play, not 15-minute sort of drive-by experiences?
Well, that's a long question, but I'll tell you, it's such early innings in the industry. I think of where we are in VR as sort of the pre-launch era, the tape and bandage perspective. What I mean by that is Oculus and the guys at Vive, up at Valve, and what Sony have done is so incredibly innovative. And if you've seen these things at their best, it's a transformative experience. So that long-term notion that we're going to be living in VR, living in AR, I believe in that. This $100 billion notion 5, 7, 10 years out, I believe that'll happen. And I've seen some of the best experiences. And for your readers or your watchers in New York, go into the Void at the Madame Tussauds and try the Ghostbusters experience. You're not tethered to a chair. It's mobile. You're running around. You are blasting ghosts. It's incredibly fun. It is tomorrow, that kind of location-based entertainment. So right now, to try to handicap, Sony versus Oculus versus Vive versus all the many others that have come, seems to me a little bit like wasted energy. Remember, it was Nokia versus Ericsson versus Motorola for the smartphone stakes back in 2000, 2002, 2004.
Well, Palm, don't forget the winner.
Oh, no.
They were the ultimate winner, weren't they?
I had a Trio. So I know. These things were all there. And by the way, I believe that Sony's going to be one of the winners, and Facebook and Oculus are going to be one of the winners. And the guys at Valve are incredibly innovative. But my point is, trying to handicap this now is sort of like, I don't know, that we're talking about carburetors and cubic inches of engines in cars, as opposed to the experience that comes out of the back end. Remember just 7 years ago, we were talking about the power of the CPU in your phone.
Right.
Now we're talking about what you get out of it, the experience you get with the new iPhone 7, or all the other Android devices that are doing so incredibly well. My point of it is this. It's going to be gigantic. We're such early stages is that we're measuring the winner of a marathon on the basis of the first 50 feet of the race. We know it's going to be glorious, but trying to handicap one versus another seems wrong.
But you see the development happening big time in terms of new games.
Yeah. I mean, the amount of development that's being done in Unity right now, we see a lot. I've never seen anything like this. I remember when Sony launched the PlayStation. I've been in the game industry a while. And, when that came out, disc-based, it was a spectacular transformation in the industry. And the number of people that entered the industry, that are still in the industry, it changed everything for console.
Right.
And I believe we are at that point right now. I believe it's believable, seriously, that VR and AR are going to be bigger than the gaming industry in total by a very wide margin, because it will encompass both gaming and lots of other things, whether it's travel, or I've seen some technologies that allow me to talk to you as if you're in the room with me when we're not. And that
it's like watching TV.
No, it's better than that.
John Martello, Unity Technology CEO. Really good to see you. Appreciate you coming by.
Thanks, Corey.
All right, we'll be right back on Bloomberg Technology. Bloomberg Studio 1.0 returns this week with Season 5 of extended conversations with some of the biggest influencers shaping media and technology, including former Microsoft CEO Steve Ballmer and venture capitalist Vinod Khosla. Emily Chang kicks off the season this Sunday with Instagram CEO Kevin Systrom. And we'll look at the Facebook headquarters in Menlo Park. 4 years ago, Facebook offered $1 billion for the service, or about $1 billion, and CEO Mark Zuckerberg pledged to let the Instagram team work independently. Emily started by asking whether Zuckerberg has lived up to that promise.
Mark has been true to his word and then some. Still to this day, Mark's interaction with the company basically is through meetings with me. And I've learned a tremendous amount from him about our transition to advertising, about our transition to a more global community, about strategy. He's one of the most interesting strategic, long-term strategic thinkers I've ever met. Think of it like having the best board member in the world. I mean, imagine how many companies would love to have Mark Zuckerberg on their board. That's what we get, and it's independent, but also you get amazing guidance and amazing counsel from someone who's been able to build a tremendous company.
How open has he been to your ideas? I mean, do you think he's learned anything from you?
I'd love to ask him that. No, I think for sure. What he quotes sometimes is that Instagram's focus on community and craft was, I think, fairly different than a lot of tech companies at the time. And, you know, Facebook has this like ship love mantra on the inside. And I think a lot of that came from Instagram's focus on the consumer and focus on making our community great. So I'd like to think that we influenced Facebook, but it's kind of hard to say that for sure. We'd have to ask him.
What have you learned from him?
Some of the things I talked about before about strategy and understanding your place in the ecosystem. I think, you know, our transition to advertising was an interesting one. I was of the belief that if we had fewer advertisers, they'd be higher quality, and it actually turned out to be the opposite. If you have more advertisers and you're able to bring in an entire ecosystem where they compete against each other in an auction, you actually get higher quality advertisements. That's something that I didn't realize at the time. And I remember him saying, I felt the exact same way when we introduced advertising, and it turns out there's this other thing. I was able to learn a lot from him there.
You mentioned you meet with not just Mark, but also Jan and Brendan.
Yeah.
How do you see Instagram taking advantage of some of the more futuristic things that Facebook is working on, like virtual reality?
Well, if our vision is to make you feel like you can travel anywhere in the world in a fraction of a second and experience whatever's happening in the world, imagine a day when you can put on a headset and be at a Coldplay concert, seeing something happen like a big protest or a big riot anywhere in the world, or something as simple as a friend's wedding. That's the kind of experience we'd love to create, and I think virtual reality in the coming years will play a critical role in seeing that vision come true.
How about artificial intelligence?
Well, we use it today. I mean, that's what powers advertising and making sure that we have the right amount of targeting.
Do you see more of it in the future?
Oh, for sure. I mean, one thing I've learned through the history of Instagram is that the more personalization you have, if we can have an experience that caters to you, the individual, if we know your interests, if we know what you engage with, we can use machine learning and artificial intelligence to make a much, much better experience for you on Instagram.
That was Emily Chang with Instagram CEO Kevin Systrom. Don't miss the full episode of Bloomberg Studio 1.0 this Sunday, 9 a.m. Pacific, 12 o'clock back east, right here on Bloomberg Television. Well, coming up is the Chinese tech giant Leico is aggressive enough to push Amazon and Apple out of the way. We're going to talk to the company's R&D head next. And if you like Bloomberg News, check us out on the radio. You can listen on Bloomberg Radio app, the Radio Plus app, or RadioBloomberg.com. In the U.S. and Sirius XM on station 119. And in New York, Boston, San Francisco, D.C., we're there on Bloomberg Radio. This is Bloomberg.
I'm Mark Crumpton. You're watching Bloomberg Technology. Let's begin with a check of your first word news. Iraqi forces have raised the national flag over a church near Mosul retaken from Islamic State. Iraqi special forces pushed into the predominantly Christian town of Bartella. U.S. Defense Secretary Ash Carter told reporters in Ankara that as a member of the counter-ISIL operations in Iraq, Turkey will play a role.
Turkey, since it neighbors the region of Mosul, has an interest in the ultimate outcome in Mosul. Many other parties do as well. It's a complicated city. And we all understand that. I think the Iraqi government understands that, the Turkish government understands it, and we understand it.
Turkish military operations in northern Iraq have led to increased tensions between the two countries. Donald Trump says he'll be packing his schedule with events until Election Day. At a campaign stop in Fletcher, North Carolina Friday, Trump said he doesn't want to have any regrets.
Our campaign is powered by our love for this country and our love for our fellow citizens. We're in a divided country now. There's going to be love. There's going to be love. It's a campaign about rejecting the cynicism and elitism of our failed political establishment.
Trump said that win, lose, or draw, he will be, quote, happy with himself. Hillary Clinton has a new ad featuring the father of a U.S. Army captain killed in Iraq. Khizr Khan was criticized repeatedly by Donald Trump after he spoke about his son at the Democratic National Convention. Mr. Khan also discussed Trump's proposal to bar Muslims from entering the U.S. At the end of the ad, Khan says, quote, Mr. Trump, would my son have a place in your America? The divisions between the UK and the rest of the European Union have begun to take shape, with Germany warning that Britain faces, quoting here, a difficult path following June's Brexit vote. In Brussels, UK Prime Minister Theresa May addressed the subject following her first EU summit since she assumed power.
We still want to trade freely in goods and services with Europe, and the UK will continue to face similar challenges to our European neighbours. We will continue to share the same values. And so I want a mature, cooperative relationship with our European partners.
May also said that while the UK is leaving the EU, it's not leaving Europe, and that there should be a, quote, give and take with Europe. The Defense Department says the U.S. Navy warship has conducted a freedom of navigation operation in the South China Sea. That's where China and 5 other countries have competing territorial claims. A spokesman says the transit operation was near the Paracel Islands. Vietnam, China, and Taiwan all claim the islands, which are occupied by China. In New York, I'm Mark Crumpton.
This is Bloomberg Technology. I'm Corey Johnson in for Emily Chang. Well, Chinese tech giant Leica hopes to push into the U.S. market with a number of new devices, including VR goggles, televisions, and even a smart bike. Leica's head of